a positive day on the street. Yes Bank on charts, Kush?
So, again, has a lot of trader interest for sure. There has been a recovery, but again, I wouldn't really suggest a trade into this. Immediate resistance is at about 21 and 21.5, just rounding that off. So yeah, if you have a position, not a bad idea to offload some. Don't go out and buy now because it's already at that resistance and that supply zone. So close to 21, 21.5, there is supply. I would rather book profits if I held it from lower levels.
Yeah, well, it's a profit booking take fundamentally, you think, after the results, Parag bhai? Because on charts, Kush is saying that, okay, now at 21, 22, you've maybe hit a ceiling.
Yeah, so I would say Yes Bank has been reporting good numbers on asset quality side and everything. Margins, of course, the NIMs are at a lower base at around 2.6, 2.7%. The only thing is that one big profit tailwind which they had, which is from security receipts, that is now fading away. So, for example, this year, they might have got a benefit of 1300 to 1500 crore. Next year, that benefit will be 1000 crores. That will start going away, fading away. So, from that perspective, I would not buy at these levels.
Okay, all right. So, fundamentally, bear that in mind as well. Milan Vaishnav, founder and technical analyst, Gemstone Equity Research, joining us this morning. Milan, thanks as always for taking the time. ICICI Bank looking like it's going to open significantly higher. At this junction, the pre-open session, it's up 4.3%. If it holds at this level, would you buy at these levels, or if you manage to buy earlier, would you book out? I'm terribly sorry. I think we're going to have to try and fix that link. It's glitching a little bit. So let me ask that same question to you, Kush. Now that we have pre-open rates, 1400 is visible right now for ICICI Bank. If you manage to get at any point over the last 3 weeks, do you take money off the table?
For sure, 1400, 1420, that is, 1400 incidentally happens to be the, 1385 actually happens to be the 200-day moving average, and just past that, there are supply zones. So multiple times the stock has hit that 1400, 1420 zone and retraced from there and sharply at that. So yes, I mean, there will be supply pressure coming in at those levels. Plus, if you did buy it at lower levels over the last 2.5, 3 weeks, you're sitting at fairly handsome profits. So not a bad idea. If you are in love with that stock, even half as much as Parag bhai is, then at least book partially and then add that same position on declines.
Okay, that's sound advice. First of all, you should never be so enamored by any investment, I suppose.
See, from medium to long term perspective, you can be in love with that stock. From short term perspective, of course, what Kush is saying.
Okay, not everything has to be a long term relationship with your stock. Okay, I want to look at MCX and Sham Metallics, just stocks which are in news. Let's see how they're responding this morning. MCX has got a thumbs up for an investment in a coal exchange. Nothing much happening there. Sham Metallics, actually, there's an investigation which will be on in one of its subsidiaries. So that's about 0.5% down. I will look at Geo Financials as well. Geo Financials also reported numbers, and the top line actually was pretty decent, but 0.5% down on that stock this morning. BHEL is the other one that we should look at, and it was in our watch list as well. There's been a withdrawal of an LOI, but that's not making too much of a difference right now. Let's look at Vedanta. The death toll in the power incident has risen for Vedanta as well. The stock is seeing mild amount of pressure right now. But let me go across to Sharad now, joining in with the big brokerage call of the morning. Sharad, what do you have in mind?
Well, yes, in focus is Concord Biotech, and Citi has come out with its report and they have maintained a neutral rating going ahead, and the target price has been cut, and there's a significant target price cut coming in from 1680. It's come down to 1190 rupees, and even the EPS for the next year has been cut by more than 20%, ranging between 20 to 23%. Now, primarily this is reflecting a deceleration in both the API and the formulation revenue, and that's negative for the company, and this will also lead to a compression in the EBITDA margins, and the slowdown is due to the adverse competition coming in a lot of key products. Now they're also lowering the revenue growth forecast from 17 to 18% to 14% on a year-on-year basis. So significant cuts coming in for Concord Biotech for Citi.
I do want to ask both the gentlemen on this table, Parag bhai and Kush, about Hyundai, because this is a stock that is trading now considerably, about 4% or over 4% from its issue price, lower, right? With that kind of supply coming in, 20% supply coming in today with the lock-in ending, there's potentially going to be downside pressure. So both on technicals and fundamentals, is it now looking like a valuation that you're finding more palatable?
I think closer to 1700 it's a decent buy, but auto OEMs have a lot of headwinds now. Steel prices have gone up so much, all of them will be forced to increase prices. Now that momentum of consumers buying into cars after the GST cut, that is also fading away a bit. So I would say, and not consumer sentiment is also not that great. Plus, remember, in every other country, petrol, diesel prices have gone up. In our country, it has not gone up. It might go up if this situation continues for a while. So I think auto OEMs, I am not very excited as of now. But Hyundai at around below 1700 due to this selling pressure, it is something to consider.
Still far away.
Still far away, yeah.
Currently at very close to 1900.
Yeah, so I am not in a hurry to buy.
On the technicals?
This one amongst the big four, in this space has had a fairly weak structure. Twice I remember, I've given a short call on Hyundai, in the last month or so. So that remains. It's had a good uptick in the last couple of sessions on the back of good volumes, but I think this is more of a relief rally and more of a short covering rally. This could be sold into. And in fact, just to quickly, technically also allude to what Parag Bhai mentioned. All four names here don't really give as much conviction, as they used to in the past. It's perhaps somewhat because of legacy that Mahindra & Mahindra still stands out. I still prefer auto anchors like Wheels India and Lumax Auto, but amongst these big names, Hyundai is a sell. Mahindra & Mahindra is more of a positional bet.
By the way, 908, so the prices have settled and IEX is amongst the top loser on the Nifty 500. Nothing dramatic, just 2.5% cut. But certainly a gash there. Even on the gaining side though, we don't have too many stocks which are really rising. Yes Bank though is up and about 20.64. I must say though, pull up the Yes Bank, whatever 3-year chart if you will, and it may announce various things, come out with various earnings reportage, etc. Stock stays at 20-21 rupees. Just doesn't budge. So bear that in mind when you're trying to think of trading Yes Bank. But yes, this update is interesting. The stock is starting off well. Let's see what it does ahead. Pharma is in news today, and Kush Bora, two large names have both gotten foam for it. 3 observations. I think Alex pointed out both Lupin and Cipla. Is there a trade in either of these two names?
So Lupin I would avoid.
Long or short?
Long or short. It was a long candidate for a while. I'll avoid long because it's had multiple legs of negative divergences, volumes on the way down fairly healthy, a lower high, lower low formation on weekly setup. So it's not looking good. Could be profit booking because if you see the last year or so, it's done rather well. So could be a phase, but right now I would avoid, maybe closer to about 2200 or 2150 thereabouts. It might turn into a buy. Cipla is a little interesting. Not a breakout rally yet, but there is a good base formation, accumulation very healthy, just recently took out the 20-day moving average. So maybe there's a case for a long trade on Cipla with a stop loss around the 1200 mark, and on the way up, you could well see the stock go to about 1280, and then supply comes in at 1315, 1320 odd. So good risk reward ratio. Maybe from a positional standpoint, Cipla is something that you can still consider.
But in the pharmaceutical space, Parag Bhai, you will stick with Torrent?
Yeah, I'm okay with Torrent because of course in between Aurobindo also I traded, but more or less Torrent is what.
You were nodding your head on the technicals as well.
Yeah, because it was a call. We just gave it about a week or so ago. Has been doing well, continues to do well. Volumes slowing down, so maybe you could see some profit booking. But the primary trend, from a medium-term perspective, very positive on Oro.
Okay, on Oro, not on Torrent Pharma. Aurobindo.
Torrent Pharma is buy and hold and shut it, fill it, shut it, forget it kind of a stock. So every dip you buy, but momentum-wise, Oro is doing rather well.
Okay, how are you seeing a Sapphire Foods, a GMDC, some of the losers this morning as we're going into the opening session? Keep in mind the overview that you're seeing is actually quite muted, fairly muted in the markets. It's not a runaway positive, it's not a runaway negative, quite like the Strait of Hormuz. No, quite, I was just looking at data. Apparently on Saturday, you had the highest traffic in the Strait of Hormuz since the war started. On Sunday, it came back to 0, and whoever went got shot at. So is that confusing as far as the markets are concerned as well? But I was asking you about GMDC and Sapphire Foods.
अभी GMDC को खराब नहीं बोल सकते 3 दिन पहले स्टॉक वाज अबाउट 20%, राइट, एंड 2 days प्रायर टू दैट इट वाज आवर कॉल. इसी शो पे यहीं पे हमने कॉल दिया था और वहां से बहुत अच्छा चल गया, तो थोड़ा बहुत प्रॉफिट बुकिंग है. आई लाइक द स्ट्रक्चर ऑन GMDC. देयर वाज अ ब्रेकआउट imminent just when we gave the call around that 600-615 zone, that's where it came about. So right now some consolidation, some profit booking, absolutely par for the course. I will actually look to add this on declines. Maybe around that 685-700 zone becomes an interesting buy again. So structurally positive. Sapphire Foods, avoid.
GMDC on fundamentals and on valuations is...
So basically, see, it was always a cheap stock earlier also. Now this entire narrative of critical minerals getting added has fueled this big rally. So I would not buy into this because I have seen this stock at 100 rupees was languishing. Nobody was ready to touch.
But at that time, if you want to play the rare earth story in India,
I don't want to play it.
Acha, you don't want to play it.
See, there are some things. See, GMDC, in fact, out of the end, all the stocks which have been talked about for critical, GMDC has actually something.
Exactly.
Yeah, but that is okay. But I don't want to play every theme in the market.
So rare earth not interesting right now.
Those themes can be very short-lived. So if you don't trade out in that short window, then you can be stuck with a stock at a very high price.
The problem is that there's a very narrow focus of tradable ideas right now.
Yeah.
Apart from your basics, maybe a smattering of FMCG banks, there's very little option and
so
opportunity.
So recurringness is something which I look for. It should be a recurring earning. It should be recurring, growing earning, compounding earnings.
Okay, let's talk a bit about Asian Paints before we go into the opening session. They've announced a second round of price hikes of 3 to 5% with effect of 5th of May 2026. This takes the cumulative price increase to high single digits to double digits between the two. Earlier there was a 6 to 8% price hike which was implemented in April. So between April and May, about nearly double-digit price hike is going to come in. The stock about 0.25% up before trade. You'll see others also in focus. Paints in focus, is that something that you would look at? Crude impact directly there, but at least they're passing it on.
I think March quarter was good for paints. My channel check suggests me that demand, volume growth was good. They have taken price hikes also. The revenue growth will also be good. So March quarter was good. Of course, from here on, things will depend on
favorite paints.
So I'm playing it through Grasim. Now Birla Opus also comes there. Ultratech is also covered.
Okay. Your take on Asian Paints very quickly, Kush.
It's a hold. Nothing breakaway. So if you have, you can continue to hold. Twice it's tested that 2100, 2000 level and rebounded. So the recovery underway. But like I said, more of a hold rather than a fresh
10 seconds.
buy.
One stock that you're looking at after pre-market.
The weekly pick ABB 7345 7676 targets 6750. That's your stop loss.
Okay, Kush, going for the weekly pick and not necessarily a day trading idea, but a lot of stocks, like we said, in focus this morning. So maybe you'll see a lot of reactions. On open though, on the green side, we'll watch out for ICICI and HDFC. But first, Mr. Market, not a bad advanced decline ratio. Interesting, really. I'm surprised a bit with that. But the indices starting off flattish. Nifty Bank flat too. I'm guessing IT index must not be doing too much either. Okay, 0.17, and the broader markets too flattish, so keep this in mind. Let's get the heat map up on the screen and see what is moving and what is not. Okay, first the gainers. There are a few gainers, more losers, but ICICI Bank right up there. Noticeably, HDFC is not in the list of the top 5. Trend on that bonus announcement 1%. Airtel about 0.5%, Ultratech 0.5%, that reiteration of a higher capacity build out. Adani Enterprises in the green, HDFC Bank is in the red somewhere. Okay, let's figure where. Right in the top 10 losers, by the way, down about 1%. Hindalco though is the top loser. Geo Financial, couple of notes said that the numbers looked okay, but the street not liking it. The verdict is negative. There is weakness in Tata Motors, Eternal, etc. But this is more to do with the fact maybe that the stocks, some of these stocks have rallied and are cooling off today on a day of quiet start. But HDFC Bank is the one, well, for some people, maybe even me, a bit of a surprise, the reaction thereof. Maybe on any other day it would have been different. But yeah, more losers. In fact, now 1/3% lower for the Nifty 50. So some profit booking coming in for sure because of the uncertainty. ICICI Bank, in some sense, from the heavyweights, the lone star really. Trent is there, but it's a lightweight stock. So ICICI Bank kind of giving that support. Nothing else really. 100 points down now for the Nifty.
You know, I can't say I'm surprised because I would say implied was truly misleading. Look at how the situation has changed in the last few hours, and that's what the street is showing. If it was not for ICICI Bank, you'd have a much, a worse picture really. Pull up the contributors and you'll actually get a sense of how poor it is. It's ICICI Bank and Trent to some extent because they have a bonus issue coming in. Bharti Airtel has taken minimal price hikes. Axis is doing okay. But altogether, you have just 24 points out of the 33 in the green coming in from an ICICI Bank. HDFC, the street is not really feeling too tolerant for that miss in net interest income on the top line. RIL, again, a reflection of what is happening in the Strait of Hormuz, right? Any kind of crude choke-ups. That's why you're seeing about a 93-point downtick. Let's pull up the broader markets and see if there's a better situation there. I mean, there's no ICICI Bank there to sort of hold up the broader markets either. So 0.5% down on the Nifty mid-cap 150. The small-cap 250 also nearly 1% down right now. Advanced decline also not looking great. I mean, none of this is surprising. The question is whether investors come in and buy at lower levels, because that behavior and that pattern has been rewarded in the last few weeks. People who have bought in at lower levels have seen a positive outcome of that decision. So maybe that comes in, but it's difficult to say right now till more clarity emerges. Let's look at the sectoral heat map if we can. And the sectoral heat map will show that it's all flat. The PSU banks doing okay. Everything is flat. It's largely a red screen, frankly. Metals, Nifty Metals, the biggest loser, 0.75% down. Realty, once again, seeing some heat and some pain. The small cap about 0.5% down. If you had to take solace, take it from this point that they're not deep cuts in that sense. You know, your worst performing index is not even 1% down right now. So that can give you some solace, perhaps. Let's look at individual stocks. Results impact. Coming in, Yes Bank, JFS. I'm just going to pull up the ones that we've not done on the Nifty. Yes Bank was actually a pretty good set of numbers, just about 1% up. Top line growth in Geo Financial was fine, but there seem to be some treasury concerns there, about 2.5% down. Crude impact, I want to pull up ONGC, Oil India, Interglobe, all of them which could react one way or the other in the red. ONGC actually, with crude going up, should have been in the positive, but that's not really happening. Kajaria Ceramics is another one that I spotted in the pre-open session. And global uncertainty impacts stocks which use gas, propane in large numbers. This one also seeing a bit of a downtick. Asian Paints and Bharti Airtel have both taken price hikes. Very minimal response on the positive side. IEX was in focus. Decoupling concerns are back because of draft rules which have come in, or draft recommendations which have come in. That's the top loser, about 5% down, at least on my list. Alex, I wonder what you're spotting and if there's any clear signal out there.
No, there isn't, Tamanna, and you've actually highlighted quite a few of the big movers this morning. You have the metal pack, and you already highlighted that as the worst sectoral performer, and so therefore the stock that is bearing the brunt of that selling is Nalco, which is down close to 3% at this juncture, 2.7% or thereabouts at this point. GMDC, some money being taken off the table after that red hot rally over the course of last week, but it's only down about 2.5% or thereabouts. Hindalco also losing about 2% or so. Niva Bupa about 2% lower. So no big losers, and neither are there very big gainers, but there are a few that stand out. Shipping Corporation of India, by the way, building on to the gains that it has had in the very recent past with a further 4.5% gain. NLC is up about 3%, Zentech a further 3%. You have Radico Khaitan that's up and about today, and Trent that is doing up, that's up about 2.5%. I very, very quickly, Kush, want to get a supplementary view on ICICI Bank, because it's not the gap up that we had anticipated. It's certainly not 5%, it's just about 1% higher, and 1361. Does that provide you with an opportunity on the technicals to buy at this point, or would you hold off?
No, hold is a better strategy, because since we were anyway looking to book profits at slightly elevated, slightly higher levels around the 1385, 1400 mark, wouldn't really suggest a buy right now. You could hold, keep your stop losses at the previous day closing around the 1345 mark and continue to hold.
If Parag bhai, If you were not maxed out on ICICI
I
Bank,
would have bought.
you would have bought. Okay. You would have bought. So that answers that question. Gentlemen, thanks so much for taking the time. Pleasure speaking with you as always. And we're joined this morning by Gautam Shah, the founder of Goldilocks Global Research. And what an apt moment to be speaking to Gautam. Gautam, thanks so much as always for taking the time, and good morning. The question is, with this back and forth that we've constantly seen, and I think the window for that back and forth has also shrunk quite dramatically based on what we saw Friday to today. How would you trade, if at all? What is the strategy that you would employ?
Good morning. Well, my experience tells me that stock markets are the best judge of geopolitics. And I think the market saw the possible problem early March, and we had that big fall. And now you have the Nifty recovering 2,000 points, which just goes to show that the market is a lot more resilient and a lot more comfortable with all that's happening in the world. I mean, the fact that US market indices, the S&P 500 is at lifetime high, tells you a lot about what markets can do and what they have done, because they really believe in discounting. You know, when the situation started, it was all about markets reacting to what had happened. Now it's all about understanding the intensity. And I think the market believes that the peak intensity of this entire, geopolitical situation could be behind us, and that's probably the reason the market is looking a lot more comfortable. I think we've rallied quite a bit. Most of the positives of the situation, I think, are in the price. So I don't think on the Nifty we are going to do anything special from here. 24,300, 24,600 are important resistance numbers. I don't think we are going to cross that in a hurry. And on the downside, I think 23,500 is going to be a sort of important support. So we are going to stay in this band of about 23,500, 24,600. But in this very period, I think stocks, sectors and themes will continue to do well, because what was earlier a major headwind is not anymore. So in that sense, I would be a lot more constructive, but I would be stock specific. So use the volatility to your advantage. If there are dips, use it as a buying opportunity. I think the worst was over at the recent low. We will gradually move higher. There are a lot of other issues that our country is still looking at. So it's not about the index and the large caps, and it's about the broader markets.
Gautam, hi, good morning. It's about the broader markets, not about the index and the large caps. So you are not really in that whole camp of people who are looking at the HDFCs, ICICIs of the world. You're looking at beyond that, and what are you finding interesting?
Well, Tamanna, to be honest, I've not been in that camp for a year, and I think that's saved us to a greater extent, because there is no return on the Nifty. I mean, it's really not gone anywhere. There is no point looking at some of these top names when you know that India is facing a lot of other issues around AI, around consumption, around the economy, around valuations versus the rest of the world. I mean, these are all issues that are still at the forefront. So I don't think the Nifty is in a position where it can do anything special. So top 100 is not something which I'm very excited about. But look at the microcap 250 index, for example. At the lows, it was at 19,000. Today is at 22,300. That's a 15% move on that index in a matter of 3 weeks. So that's where the opportunity is. And I think microcap and small cap, I think, will outperform the Nifty for the rest of the year. Now, how do you play this? You can play it by buying a basket, which is probably best for a retail or an HNI, without really putting your mind to stock picking. Or, you can look at select pockets of the market which have outperformed. And I think for us, metals, PSU, energy are three baskets, which we have been recommending and we continue to like for the medium term.
Gautam, you hit a raw nerve of sorts, if you will. Good morning. Simply because fundamentally it seems to be a no-brainer that energy and energy transition, or both, like in all forms of energy, thermal and non-thermal, will be mainstays. It was probably true before the conflict as well. I think the conflict has only reinforced that belief, both in terms of the companies, maybe the government, and the market players as well. What though looks promising, because this ecosystem is very vast, right, Gautam? I mean, fundamentally, there are green energy producers, there are thermal power producers, there are these suppliers, T&D players, what have you. There's a very wide ecosystem. What looks good to you?
See, this entire energy theme has been a great story for the last 1 year. I think fundamentally, as you rightly said, there was always a case. But in stock markets, there's always a right time for everything. And now with this geopolitical situation that took place and the kind of impact that it had on our country in just 10 days, I'm sure the government and everybody realized that there is a problem and we need to correct it. And I think the market saw that. And I think the market saw that 3 weeks back, and that's probably the reason so many energy stocks have come back so strongly. Disclosure, we covered it at Goldilocks as well. And I think this is a theme that's going to stay for the rest of the year. The NSE energy index is just broken out 5 or 7 days back. This looks like a mega trend. I think a lot of stocks will end up delivering anywhere between 30 to 50%. Some might even double. And I think that's where commitment should be, because I think the government support is going to be there. The charts are very well placed. The relative strength, is all there. Now, what to buy? I think I would still stay with the green energy producers. I think it will all trickle down from there. But when a theme does well, everything is a beneficiary. I mean, we saw that with chemicals 4 years back. Everything in chemicals did well and got into a massive bull market. So I think the entire space will explode. If you are somebody who can get into stock picking, you can go to the small cap and micro cap within energy, or you can just stick to the top 5 or 7 bets, which are quite in the open, and I think they will do really well.
Okay. All right. I've asked you this in the past, Gautam, and just from the perspective of one of the most volatile moves in the recent past, and that is crude oil, right? Do you have an opinion on the way that Brent is moved, and do you have any idea about the direction? Because what we saw on Friday was a very sharp move on the downside. The moment that there is even a semblance of a positive update, there's a very sharp move on the downside. So what's keeping it where it is right now?
Well, it's quite obvious with what's happening in the world, it's keeping it where it is. And I think it's going to remain this way for a while now, because I don't think you have a result. You don't have a result to the conflict as yet. It goes back and forth. And obviously, in this kind of an environment, you can't have crude settling down. For 2 years, crude went nowhere. Nobody really talked about it. It was languishing in that band of about $65 to $85. Talking about NYMEX crude, and then this situation came up, and that led to a big move towards close to 120, and now it's back around 85-90. I think it will stay elevated, which I think in some sense is a problem for India, and therefore Nifty and large caps is another reason why they might not do as well. More likely that they stay in a band of say 80 to 105, but I don't think the movement in crude is a lead indicator to what happens to the stock markets. At least that's not worked page by page in the recent past. So I would not look at it with such close metrics. But I think what has happened
sorry, I'm going to just interject on that point, because the general understanding is exactly that indicator, that crude is a lead indicator of how equities is going to behave. You're saying that it's been decoupled?
I'm not saying it's decoupled, but this logic was written in the textbooks in the 70s and 80s. And I don't think you can go by that logic, just one logic to understand equity markets today. There are too many other factors. Who had factored in domestic liquidity? Had domestic liquidity not been there, there was a very clear direct correlation between crude and, equity markets. So I'm just giving you food for thought. And that's probably the reason we're looking at a lot
of I'm saying forget about 70s and 80s. Let's talk about the last 6 weeks in the Strait of Hormuz. Crude hits 100, and temperatures here go up as well. So despite the domestic liquidity, are you saying in the current situation, forget about the textbook definitions, crude is not something that is going to impact us as much as it's being thought?
Not at all. Crude will definitely impact us in the medium term and long term. Market realizes that, and that's the reason we are still one of the underperforming markets in the world in terms of the overall recovery that has happened in the last 3 weeks. S&P 500, as I said, is today at 7,100. Look at European market recovery. Crude is definitely a problem. All I'm trying to say is don't try and judge crude movement on equity market movement on a day-to-day basis. If it stays elevated, it's definitely a problem for India long term, but I don't think it's going to be a case for markets to collapse.
Okay. Yeah. Also puts into question that in normal economic times, a lot of the other indicators become very, very relevant. These days, the indicators probably have to react a lot more to the Truth Social posts, and now and the posts on X, but the Iranian side as well. So that is also playing quite a bit of havoc. Gautam, I'm inclined to ask you about gold. After a phenomenal 2025 or better part of 2024 and 25, it's kind of gone quiet, almost sedate. What's happening here?
I'm happy it's gone quiet because $1,700 became $5,400. That's not normal by any standards in a matter of 18 months. It needed that consolidation. It is in that consolidation phase. It's not going to fall big. I think it will see its rallies from time to time. And I think it'll probably stay in that band of, say, about 4,000 on the downside and 5,300 on the upside. It needs that consolidation. I still feel that silver is the bigger opportunity. We've recommended clients to take positions in silver every time it gets close to 65. I think it will stay in that large band and it will trade with the bullish bias. But gold and silver is an opportunity. There's no doubt about it. It's just that you have to now buy at the right price. But the other big theme, which I'm also a big fan of, is hard assets. And I think, as you know, I've said this on your channel multiple times, the metal space looks very interesting to me. It is, as we speak, at lifetime highs. Look at what ferrous and non-ferrous metal stocks have done in the recent past. And I think the best is yet to come for metal. So there's a big move, even from current levels, for the entire metals pack.
Non-ferrous both, right, Gautam? Very quickly.
That's correct. See, non-ferrous already had a mega trend in the last 1.5 years. Now the ferrous side, the iron and steel producers are making a comeback.
Yeah.
So that's also a big opportunity going forward.
Yeah, by the way, like we said in the morning, steel spreads viewers have really shot through the roof. So keep this cohort in mind. Gautam, great getting these lead indicators from you, even if crude may not be a lead indicator anymore right now. And people will have both sides of the opinion there. But thank you so much for joining in and talking to us today.
Thank you, Neeraj. Pleasure.
All right, that's Gautam Shah of Goldilocks Premium Research. Now, let's move on to the corporate conversations and first get in the flexible workspace provider Smartworks. They are accelerating the expansion strategy. There were question marks raised around whether they'll be able to meet some of the guidances that they laid out, etc. or no. Before we get the management, let's get in Mahima to set up the conversation for us. Mahima.
Right, so Neeraj, as per the recent news flow coming in with regards to their expansion, they've expanded a multi-city engagement with Forbes where the client portfolio spans around 4 cities, over 5,000 seats, and this is expected to have a rental revenue of around 155 crore from all locations. In the recent news flow, they had also announced their Hyderabad capacity expansion. They were set to invest around 17 crores in that one as well. In terms of where capex guidance goes, they've said that 2.5 to 3 million square feet per year is something that they're looking to add, and 350 to 400 crore per year is what they're going to invest to do so. In terms of geographical strategy, global capability centers contributed over 15% to their revenues in Q3, and they are positioned as a major growth driver for the next 3 years as per management as well. And in the last 9 months also, they've signed 4 mega global capability center deals with over 1,000 seats in Europe as well as America. Right now, the expansion focus remains in tier 1 cities, and Singapore is positioned as a strategic presence as well. In terms of the management commentary coming in, I think the key one for me was that Smartworks can sustain 25 to 30% of annual growth without any incremental equity raise is something that they've said. So we have to watch out for as to how this expansion takes place via internal accruals. So this is the entire aspect of news flow coming in and what we're going to talk to management about.
Okay, Mahima, thanks for setting that up. Harsh Binani, co-founder and executive director of Smartworks, joins in right now on the show. And Harsh, good morning. Thanks so much for joining in. We thought of doing this conversation with you while you are in your silent period, not to get in not the last minor decimal detail, but to just get a sense of whether you as a firm are on track for delivery with the cash flow numbers estimates that maybe the street would have had 6 months ago. Because, the last couple of months, there have been question marks, not just for you, but for a clutch of players in this ecosystem, that will they be able to hit the numbers of expansion that they had guided to, the million square feet that they had guided to, etc. Could you tell us if that is indeed on board, if you are permitted to talk about it in your silent period?
Good morning, Neeraj. Thank you so much for having us this morning. Just to take a step back before I get into the specifics.
Yeah, sure.
Neeraj, what we are seeing today play out is a mega trend. It's once in a decade shift right in front of us. Offices are no longer being consumed as a static conventional lease, but rather you are seeing consumption happen through workspace as a service. In fact, it's not a surprise that flex space, where we are the market leaders in terms of area, is no longer an alternative. It has actually become the default now. And you have several such examples in India, whether it's the data consumption or the quick commerce revolution. Flex space in India is the largest category in the world. So that's the broader context with which how we should look at the overall space. Of course, we will be declaring our results very soon in the next couple of weeks. So I can only reiterate what we've mentioned during our last 3 quarterly earnings. The company went public in July 2025. And the business model of ours in the last quarter, like we mentioned, is now entering a cash compounding phase where the business model is flex, but in reality, we are an annuity-led flex platform where large tenured, long enterprise contracts give a lot of predictability to what we do. So today we sit on more than 4,700 crores worth of committed contracted revenue. We've also mentioned during our last earnings call and consistently that the business will continue adding 3 million square foot every year, but that's largely going to be funded by internal cash accruals that the business has. So we are firmly now entering a compounding phase where not only will you see massive growth in footprint, but all of this is also going to come with expansion in margin because operating leverage is clearly playing out. And you will also start to see that reflect in our balance sheet metrics, like you had seen in Q3, where our ROCE jumped and our free cash flow was almost starting to get positive as well.
Harsh, hi, morning. Alex here. I'm just wondering about relatively near term, and this is something that a lot of people will wonder with regard to setting up of new capacity and acquisition, whether cost will increase because companies will have inputs rise in terms of inflation because of the war and because of everything that we're seeing, right? So you're talking about steel prices going up, you're talking about concrete prices going up, everything goes up. And so therefore real estate, irrespective of which place you play in, is going to see an escalation. Is that something that you're bracing for as well?
Good morning, Alex. It's a great question. And in fact, the question reminds me of a massive opportunity that lies in front of us. Because if you look at how this industry has now risen to almost become 15% of India's commercial office space, we are a service provider whose main raw material to begin with is the rentals that we pay to our landlords. And in the case of Smartworks, you will see that we've specialized in leasing really large format campuses. Courtesy leasing these large campuses, we always end up getting preferred terms. And recently, there was a report by Cushman as well that the vacancy in India has actually tightened up. And it is actually at a 5-year low, nothing that we've seen in the last 5 years since pandemic. So this, in fact, presents a massive opportunity for us because this is actually telling you 3 things. One, that there is real demand on ground. For the last 3 years, consistently, about 65 to 70 million square foot of leasing has been happening in India consistently. So it's not necessarily a demand issue. The bigger issue is whether such supply is available or not. And here is where we have secured our supply for the next 2 years. So our input costs when it comes to rentals aren't going to go up. And the way our business model is set up, today our pan-India average per seat cost is about 7,500. Alex, what is 7,500?
Yeah.
7,500 is about 250 rupees a day. What are you getting in that? You are actually getting an office plus a hotel combined in that. So office rental costs are taken care of. And like in a hotel, right? Your utilities, electricity, tea and coffee, facility management, everything is bundled together. And this offering is not isolated in one city. We have several campuses across the city. So for example, Alex, in Bombay, we have campuses in Andheri, Vikhroli, Navi Mumbai.
So basically,
and here when you see,
Harsh, ultimately what you're saying is that you have ample room based on the costs that you currently have worked through, and you can pass on if required into that cost, right?
So without even passing on and taking any material pricing action, because our cost to serve is so low, we will continue delivering value. And Neeraj had mentioned, of course, right, when Mahima had set up the context earlier about this 155 crore deal with this Forbes 2000 company. This is in fact a testament, Alex, to the business model that we are able to sign a lot of long tenured multi-city deals, right, with a lot of these large enterprises where we become core to their strategy. And as India proliferates, you will start to see a lot of these concepts of work near home, walk to work, all play out, which is where a model like ours, right, which is set up all across India, and we have several hubs in each city, that will continue to benefit from this mega trend playing out in front of us.
Sure. Harsh, very good morning. Tamanna here. A couple of mega trends playing out. And the other one, of course, is AI, and I'll come to you on that. Just wanted to check, what are your current occupancy levels? Are you still maintaining around 90-92%?
Good morning, Tamanna. Our occupancy levels continue to remain above 90%. So for all our mature campuses which have finished more than 12 months, in fact, our committed occupancy, as we reported in our Q3 results, was in the range of 93%. And this is courtesy all of the long tenured contracts that we signed. And in fact, we had mentioned a very key metric to our business. 35% of our revenue comes from 1,000+ seater deals. And these mega deals ensures a lot of stickiness. And the advantage of these deals is that not only are these clients scored to that location, but they also expand and grow with us. So in fact,
just trying to understand. So sorry, Harsh, just trying to understand. So any impact you've seen in new business because of what's happening geopolitically or AI adoption, and because that's also a mega trend which is coming through. And I understand perfectly that 35% of your clients are long term, so that stickiness stays. But are you seeing any new business impact at all in fresh occupancy coming on?
Look, our business over the last 5 years has been fueled on uncertainty. First, there was the COVID pandemic, and now you have the recent uncertainty. All of this augurs very well for flex space as a concept, because larger occupiers do not have an inclination to sign long tenured conventional leases of 9 to 10 years. So the more uncertainty that you see, better becomes our product and the value proposition. So from that perspective, in the last 3 months, the two large disruptions that you've seen, right? One is the impact of AI, and the second is the impact of this entire war. Both of them have in fact been big demand drivers for us, and we have seen no slowdown whatsoever. And in fact, going forward,
sorry, just for my answer, how can AI be a demand driver? You'll just need few people in seats for any business.
That's a very simplistic view of how AI is going to impact the workforce. But if you just take a step back, what is happening? AI is actually creating new industries. A lot of AI occupiers, particularly as we're seeing India becoming the office capital of the world, right? A lot of GCCs continue to come to India. They have some of these high value functions. And for them, when someone like Smartworks can come and deliver office spaces in 90 days across India, it becomes a big advantage, because you yourself don't know how many people do you need in 3 years, 5 years. So from that vantage point, A, we benefit, and B, AI is redistributing a lot of workforce across different industries. So from that vantage point, if you had to just look at the Cushman report as well, what is it telling us? Lowest vacancy in last 5 years. In sub-markets, it's less than 3%. So we believe that AI will actually be a big facilitator for redistributing a lot of demand to flex. We do not see any slowdown based on AI. And in our model for the next 2 years, we have our entire supply secured. And we have a committed revenue of more than 5,000 crores. So in fact, it's going to be a big opportunity ahead of us.
All right, let's hope that's how it works out, Harsh. And I agree with you. I think the verdict is still out. And the final word has not been said on what exactly is the impact on AI, but we've seen globally large flex space companies sort of see meltdown in their stock prices for this fear, right? That you're going to have less people that will be needed, less bums in seats, as they say. But thank you so much for speaking with us today. Great to have you on. All right, our next conversation, DRDO is set to hand over full missile production to private companies under a new manufacturing model. For players like Premier Explosives, this could translate into stronger order visibility and deeper integration into India's missile and defense ecosystem. Before we speak to the management on this development, Varsha joining in to set that conversation up.
Well, thank you so much for that. You know, what DRDO is signaling is actually the missile technologies, if you see, are rapidly evolving, and DRDO is working closely with private industry, wherein the focus will be shifting from R&D to full-scale production. And the new model, that is development cum production partner, is being introduced. Now, what is this model is, the DRDO will design and develop missile system, and an entire production will be handed to the private companies, and the private players will be involved from start to finish with fastest delivery and scalable manufacturing. Now, why this is important? Because this strengthens Atmanirbhar defense manufacturing, reduces dependence on the PSU-led production, which creates long-term order visibility for private players and will boost domestic missile and explosive ecosystem. And lastly, why Premier Explosive is in focus? Because it's a key developer, supplier to DRDO and defense program, and also is expertise in energetic materials and explosive, and has direct linkage with missile and strategic system, and also is positioned to benefit from higher indigenous production. So hence, Premier Explosive will be a big beneficiary out of this.
Okay, we're going to try and get the management. I'm told we've just lost that connection. Thank you for that, Varsha, and we'll come to that conversation as well. But defense space overall, you know, I mean, the stock prices of some of these companies are not really keeping up with the pace of announcements, is what I would say. Is one of the reasons possibly could be that lumpy business? You don't know when it's really going to hit their balance sheet. Timelines are long. Yeah,
but that could be one. But two, I think the last 12 months have shown that some bit of that lumpiness is getting out, because 6 upward revisions to the annual outlay of defense by the government of India alone, right? Let alone what comes out now of Europe and some of the others that we were talking about day before yesterday too, or on Friday.
The South Koreans are here today. I don't know if there's going to be something on defense, but definitely on technology there will be more cooperation coming in. Yeah. But then that's the point. The revisions are there. The stock price is not keeping up with the pace of.
Yeah, some of them have though. So I was just seeing, for example, just one swallow does not a summer make. But Paras Defense, for example, in the last 4 days has moved up from 700 to 810. A couple of others, but yeah, maybe the street now wants to see the proof of
real, the real action, right? Which is why I've heard one commentator at the very least talking, if I'm not sure if it was Parag Bhai, talking about why he likes BHEL as opposed to some of the other names, because the timelines for the completion of their projects are relatively shorter and you actually see cash flows come through. Whereas a HAL, you would wait for quite a while, or a shipbuilder, you would wait for quite a while, just purely because the gestation period is so long and you have to watch that Z-shaped revenue model play out over a period of time.
Even a Zentech, for example, had a great run and then cooled off quite materially as well. So in some sense, some of these are interesting thoughts. Okay, let's see what happens to defense. Okay, but like we said, I mean, we try, while we wait for the management to come back, we're trying to talk about other themes which could do well, and FMCG, which had in some sense a banner day on Friday, their expectations are being shaped by geopolitics as much as demand, because our Middle East exposure is adding that little bit of uncertainty. Before we get in Abneesh Roy to talk about which stocks could do well against this backdrop, Mahima Johnson with a list of the factors to watch. Mahima.
Right. So Neeraj, Friday moves that we saw on FMCG was largely on account of the way, Bajaj Consumer came out with its earnings and did see, a good growth coming in. That's why, probably we saw an uptick in the counters, penciling in a good Q4. Overall, if you take a look at Nuvama's top buys, they include Marico, Nestle, Tata Consumer, as well as Britannia, and they also like Pidilite and Asian Paints. Now, in terms of the Middle East exposure of FMCG company, I think the highest is from Dabur around 6%, followed by Imami around 5 to 6%, then CCL products around 5%, Marico, Bajaj Consumer, Berger Paints, Tata Consumer, as well as Asian Paints and Pidilite in that 2 to 3% of range. Now, overall, the concern going forward will be because of crude prices, because that will, overall impact packaging cost of these companies, as well as raw material costs going up. Packaging costs around 15 to 20%. The other aspect is edible oil inflation as well. That's one of the key talking points, because overall edible oils have in the last couple of weeks, the price hikes have happened in that 4 to 5 liters per range, and this will of course accelerate revenue growth for counters like AWL, Agri, as well as Marico. But overall palm oil has been up 25% during the quarter, and this could impact counters like HUL, GCPL, Bikaji, Britannia, etc. Price hikes going forward are expected in Q1 FY27. This is largely the expectation. Even in terms of monsoon, below that 94% mark is negative for rural consumption. So that is something that we will be watching out for going ahead in FY27. But overall, this could be positive for summer categories. So counters like Varun Beverages, Imami, Quality Walls, United Breweries, etc. could benefit. Just last point of view from a valuation perspective, a lot of these counters are trading below their 5-year averages. So it raises the question whether this is the right time to enter a lot of these FMCG names or not. So this is the overall view of what's happening in the FMCG space.
Okay, thank you for that, Mahima. Abneesh Roy, Executive Director, Research, Nuvama Institutional Equities, joins in to speak on this morning. Abneesh, very good morning to you. And of course, we'll get to FMCG, which is where your expertise really lies. You track that. But I want to get an overview on the markets first from you and the kind of uncertainty we've seen. Even though we have range-bound trade today, do you think markets are now looking at other factors apart from the disruptions of what's happening geopolitically?
Yeah, I think I'll speak more on FMCG. Yes, markets will be volatile based on geopolitical. Crude clearly is a monitorable. But clearly we are positive on FMCG in the FY27 perspective. And we see multiple reasons for that. What we are seeing clearly is we are seeing pricing growth coming back for the sector. If you see paints, 2 round of price hike by the market leader has been announced. So that clearly is a positive for FMCG from a market perspective, because as you rightly asked on the geopolitical issue, lot of other sectors which have, say, exports, etc., will have that issue. Even in FMCG, Imami and Dabur will see this issue in March month and April month also. That Middle East will be quite challenging, because if crude is not coming, then obviously FMCG is quite difficult to take from India towards Middle East. So that is a challenge for Imami and Dabur. But for many other companies, Middle East is quite small. So we are seeing that interest in the sector is coming back because of pricing power, and local players will lose market share, right? See, in most of the FMCG paints, there is 10-20% kind of market share of local players. They will feel very challenging in terms of working capital. They'll cut down advertising promotions. So we always see market share gain for the market leader in these kind of scenario. Of course, Q1 paint sector, FMCG will see margin pressure. But Street is now looking at a more long-term, that FY27. Yes, El Nino risk is there in the second half. Q1, there is a margin pressure. But frankly, every sector will see challenging times because of the Iran crisis. But overall things, if you see pricing growth, operating leverage, and definitely market share gain, those I think market is taking positive from a construct perspective for the FMCG.
Okay, so it's a strong argument to make, Abneesh. And I guess to a certain extent on Friday, a lot of buying seen in some select FMCG names, even the frontline companies. My point to you, though, is just to counter that just a tad bit on expectations, which is, for example, for an HUL, after the last quarter results, where the expectation was that volume pickup would be seen in FY27 in the first half, and it would improve further in the second half. If there is going to be a cost escalation, and okay, fine, if they have pricing power and they don't have to pass on as much as the smaller players, there will still be a challenge to that volume growth, won't there be?
So good question. So if you see what you have said, actually that is something which has already played out, and that's why Hindustan Unilever, Asian Paint, and many FMCG stocks corrected in the initial time frame of the Iran crisis, because crude oil and palm oil, etc., are a key raw material for HUL and most of the FMCG. So that valuation comfort we got. These days, how it works is near-term results really matter. So if you see, the start for FMCG sector in Q4 has been extremely lucky, extremely strong. So we saw VST Industries result, that's a tobacco company, very strong sales growth, very strong EBITDA growth, but that was on a soft base. Then we saw Bajaj Consumer on extremely strong beat versus our and very strong numbers. Now Nestle results are there tomorrow. We have already published a preview. We expect strong numbers from Nestle. Even for Hindustan Unilever and Asian Paint, our sense is we should see Q4 broadly the recovery will sustain. So for Asian Paint, we are building in 9% volume growth in our preview numbers. But we expect that given Asian Paint is so aggressive, we will see beat to that. That is our expectation. Even for Hindustan Unilever, what you said, Q4 versus Q3. Q3 was a good recovery, right? Company saw 4% volume growth and 5.5% sales growth, which was a multi-quarter high. We expect that even in Q4, we should see recovery in HUL sustain. How market sees these stocks, and that is the right way, that yes, initial Iran crisis already it has played out on the stock correction which we saw. Then the market sees okay, Iran is now getting factored in. Now what? So yes, as I said, because start to the Q4 result has been strong, and as I said, in Asian Paints and HUL, I do expect that overall Q4 numbers should be decent. That's why I think the valuation comfort is coming back. Of course, sector rotation happens. Initially, we did see that IT sector in the last 2 weeks, there was a comeback. Sector rotation also is happening, and crude from the top has corrected. So whenever you see that geopolitical issues are getting resolved, people feel that okay, yes, FMCG, the stocks have corrected, there's a linkage to crude, then those stocks come back. So what you said, I think it's a mix of all this rather than just no sector will keep correcting based on the same news, right?
Agree completely. But okay, so correction is one. The other thing is, Abneesh, the recovery, right? And there's talk of Asian Paints at least having hiked prices, and other companies might follow suit. And this is the second hike, I believe, in the last 2 months. What does this mean for the paint stocks' fortunes for Q4 and Q1?
Yes, it's a good development. I think in paints, if you see first round of hike, which Asian Paint took was around, can I go ahead?
Do.
Yeah, 6 to 8% hike Asian Paint has taken, which is a positive. Apart from that, in the second hike, which came over the weekend, we are expecting 3 to 5% hike. So if you see, it's a very sharp double-digit hike if you combine both. Generally, Asian Paint is quite aggressive in the recent times and in inflationary year. Please note there is 25% market share of local players. Even Birla Opus, if you see, has already taken one hike. We expect that even Birla Opus and all other paint companies will eventually match Asian Paint on pricing, because this industry, if you see, only 40% do have pricing power. So in spite of all this Birla Opus and inflation, if you see, there's a lot of concern that will Asian Paint be able to pass on. Just see how quickly they are passed on. And my sense is at a $90 also, crude oil, these two hikes are now going to overcome the entire inflation. If crude moves to $100, I think one more hike might be needed. So we would monitor that. But I would say that even if crude moves to 100, I think Asian Paint will take one more hike. Because as I said, you operate at around 40%, paint companies operate at 40% gross margin. So this kind of inflation you'll have to pass on. And as I said, market leader always takes market share in this kind of year. And in fact, I see a silver lining that the local players and the new player clearly have not seen this kind of a volatility in the raw material. And as I said, the advertising spends and promotions will be cut by the new player and the local players. I think that's a market share gain scenario for Asian Paint. So yes, in Q1, of course, there will be margin pressure for entire FMCG and the gross margin even for paint companies. But as I said, May 5th when the second hike is happening, I think the entire hike inflation is being taken care of. So there will be some pressure, but structurally investors will see what is the medium long term. And if you see how this industry behaves is when the inflation actually corrects, you see that players will still hold on to the pricing for 1 or 2 quarters. So that's where I think the entire stock up move happens. Plus, as I said, in Q4, I expect Asian Paint to report a good volume growth. Okay. So we are positive on the Asian Paint in that space.
Abneesh, before we wrap up, top FMCG pick, top paint pick.
Sure. So in terms of near-term numbers, I think Marico, Nestle, Tata Consumer are looking the best. In terms of paint, I already answered. Asian Paint is our top pick there. We are seeing very high aggression from Asian Paint, and Asian Paint will take market share from local players in this scenario. In terms of crude recovery, clearly Godrej Consumer and Hindustan Unilever are also good place, but you'll have to monitor crude oil for that because it's so volatile. But Godrej Consumer and HUL have high indexation to palm oil and say to the packaging cost also. So if crude corrects, I think they are good plays on that. So we would add those two names from a crude play. So these are our topics, Marico, Nestle, Tata Consumer and Asian Paints.
Okay,
From a fundamental perspective.
Fantastic. From a fundamental perspective. Thank you, Abneesh. I mean, the foremost voice really on the space that you can ask for, and very clear response over there coming in from Abneesh Roy of Nuvama. Let's talk a bit about BHEL. Companies' order inflows in FY26 have fallen sharply. Let's pull up the stock price as well. The stock price has definitely not fallen sharply. That's about 4% up right now in a market which is quite tepid otherwise. Puneet, what's going on with BHEL?
Well, thank you for that. Definitely the 19% drop is one of the key concerns. There's also a letter of intent being cancelled of almost 2,600 crores, but the overall order inflows of 75,000 crores as an overall number still continues to be strong. And there is a book-to-bill ratio of almost 7 times to the company, given the company's current revenue state of affairs. So you are seeing order book visibility for the company at 7.4 times gives you enough comfort for the next 1 to 2 years. And these issues of cancellation of LOI because of non-delivery is of course, while concerning in the near term, you will see a long-term more prospects for the company to be important at this point of time as well, especially in terms of new order inflow. So execution has picked up sharply in Q4, and hence in the whole year also the provisional revenue number gives us that key positive trend for the companies. But overall, given the long-term nature of the order book, hence potentially one of the key reasons for the stock to continuing to be in an up move. Provisional numbers for FY26 turnovers are up almost 18% at 32,000 odd crores, with they have already commissioned 8.9 gigawatts of power capacity in FY26. So these are some of the key factors to watch out for. Stocks rallying possibility on that 7.4 times book-to-bill ratio, but a lot to watch out for in the quarter 4 earnings.
Yep, for sure. But Puneet, thanks for that update. Viewers, I'll tell you why the stock seems to be, or stock is doing well today. That is primarily due to the FY26 update that they've given. That business update missed the consensus revenues by just about 4%. Only 4%. I think the street had factored in a very large miss from BHEL's end because of execution challenges. What they've done is only 4%. And hence, the belief will be that actually the earnings cuts that were factored in will not be so bad, and they might need to revise it upwards. Also, the backlog of 2.4 trillion odd lends visibility for the next 5 to 6 years, and hence this 2,600 order LOI that they have to take back 1% of their order book. Not a dramatic miss. And therefore, as we said, BHEL now moves on from being getting the dopamine from order inflows to actually seeing movements on the back of execution. I think that is what will drive BHEL. And because Q4 has seen a sharp execution uptick, the stock is up 3.5% today. New highs for this one. Keep an eye out for the big execution play out of India. And yes, Tamanna, God bless you.
Thank you. That was a quick sneeze in the studio. Okay, BHEL looking exciting. We have a very interesting interview lined up, in an exclusive interview on NDTV's Walk the Talk with Editor-in-Chief Rahul Kanwal. Industrialist and RPSG Group Chairman Sanjeev Goenka has shared his insight on the ongoing energy crisis, global uncertainty, and how India stacks up to its peers. Listen in to a slice of that conversation.
You know, we're talking at a time when the world finds itself in the midst of the biggest oil shock, energy crisis, global economic uncertainty. How are conglomerates like yours dealing with the uncertainty around when this war ends, how long it goes on for, and the ripple effects it has on companies like yours?
Undeniably, there is an impact. And those companies, we have one company where fuel is an important raw material. And therefore, it's a huge impact on that. But frankly, there is also confidence that somebody like Narendra Modi, or Narendra Modi specifically, he leads us. And ये भरोसा है कि मोदी है तो होगा. 2 महीने 3 महीने यदि तकलीफ भी होगी तो उसके आगे चल के अच्छा ही होना है.
Sure, yes and no, because while of course the government can try what it will, and it is, a lot of this is frankly out of the government's control, and therefore you're having to respond and react to actions of the Israeli side, the Americans, the Iranians, which are having an impact on the Indian economy. You know, you're also in the retail business, apart from a whole host of other consumer-facing businesses. Are you seeing that impact already in terms of consumers holding back on purchase?
I think there is some impact, and people are wanting to conserve resources and capital. But say, as far as we are concerned, yes, we do realize that 2 or 3 months will be challenging. But it's about this whole India story. It's about the great potential that India has. And yes, 2 months or 3 months or 4 months, who's to say, will impact us. But these 2 or 3 or 4 months cannot be defining in the career of a company. And as I said earlier, the confidence is that when you have an Narendra Modi at the helm of affairs, he will make sure that India gets its due soon enough.
Dr. Goenka, there's never a good time for war, but this war comes at a particularly inopportune time from the Indian economy's perspective, because post the budget, it just seemed that the Indian economy was poised for a takeoff in terms of capacity expansion, industrial production, and the economy seemed in a good space. Do you see the consequences of the war being relatively short term, or do you think this could drag on for several years, if not just for a few quarters?
I don't think it's going to be very long term.
Not the war, I'm saying the consequences of the war.
The consequences also I don't think will be very long term. But frankly, it's difficult to forecast how it's going to impact us on a medium term basis. There is a short term impact, of course, and it's going to impact everything in terms of the company's performances. But I think going forward, the faith in India, in the Indian consumer, in the Indian market, in the Indian ecosystem is so high that I think it's going to bounce back. And for us, we have one set of businesses which are impacted because they are based on fuel, and therefore the prices are impacted. So therefore there is an impact there. But in most of our other businesses, it's not really impacting us. For example, the power distribution business, it doesn't impact us. Of course. In the renewable energy business, it doesn't impact us. In the BPO business, it doesn't impact us. In the music business, it doesn't impact us. In the film production business, it doesn't impact us. So, you know, having a diversified portfolio is actually proving to be an advantage in this situation.
KP Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated-listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise.
Welcome back. You're seeing some amount of recovery in the markets. In fact, I just want to pull up the Nifty and Sensex before we get to our next conversation. Nifty peaking into the green. So recovery from lows to some extent, but it's been range bound. 24,300 has been held on. Let's see if we get to 24,400. We're not too far off. The Nifty, the Sensex also back about 0.25% up. But let me go across to Rishabh, who's giving us details on an event which is worth tracking today. There could be a fresh FTA, free trade agreement, between South Korea and India. The South Korean delegation is here today. Rishabh, give us more details.
Very crucial meet between India and Korea is set to take place today here in New Delhi. What you have is the heads of the 4 largest conglomerates that have come out of Korea, also joining the South Korean president on an official business delegation visit. You have the chiefs of Samsung, Hyundai, LG, as well as SK Group, the much famed SK Hynix AI group is also coming to India as part of this delegation. So a lot of very interesting names as part of this. You have a 200 plus business delegation that is coming in, flying in from Korea to New Delhi. The focus sectors are, of course, going to be electronics, autos, semiconductors. You have electric vehicles, shipbuilding, AI, supply chains, all of them becoming a very integral part of this current visit. Another very integral part of this visit will be the upgradation of the current FTA that India and South Korea share. So the CEPA, the Comprehensive Economic Partnership Agreement, that is also set to be upgraded, because the current CEPA, which was signed way back in 2009, that has some sort of limitations now, and there is scope to sort of review it and take it to the next level. So that's what Piyush Goyal, the trade minister, is also going to look at with the South Korean president. What you also have is India pushing for better access when it comes to services, pharmaceuticals, agri-products, while what Korea is looking at is gains in manufacturing as well as electronics. So there is some sort of a trade-off to be made when it comes to these trade agreements as well. What is also important is that both countries are looking to diversify against some sort of dependence on China, as well as there's also the US tariff pressures that the countries have to navigate. So a very interesting business meet that is lined up here in New Delhi.
Right, certainly, and we'll keep coming back to you over the course of the day to get more clarity on that. Rishabh, thanks so much for getting us those details. By the way, we've come off the low point of the day, certainly, and trading in the green just about for the benchmark Nifty 50. And it is a couple of banks that are contributing. You have ICICI Bank, certainly, that is pulling the most weight, but you also have Axis Bank and SBI that are contributing on the upside. On the flip side, the biggest contributor on the downside is HDFC Bank, which is losing ground in trade today. We've got Ajay Srivastav, Managing Director of Dimensions Corporate Finance Services, joining us this morning. And Ajay, always a pleasure speaking with you. Thanks so much for taking the time.
Good morning.
Let me ask you this. With the kind of comeback that you've seen in April, the market certainly seems to be pricing in that the worst is over. For those people that missed the bus and did not deploy at any point during March, have they missed a golden opportunity? Or do you think that the opportunity still exists as things stand right now? How are you deploying funds or advising to deploy funds?
There is always opportunity. You have never missed the bus. The bus keeps coming. You know, it's like your metro circuit. The train will keep coming. You get on it, you get down. The question is, did you get down or did you circle it and came back to exactly the same spot? Because the key is here is profit booking. If you not booked it, you sat on the train well, you saw it go to the high, and you come back to the same platform. So I think you never miss the bus. There are always opportunities. And India is definitely, you know, when we get optimistic, we really get optimistic, like all stock markets. And that's what is happening today. The worst is over. No, the worst is not over. The worst is still to come. As the cost starts to percolate through the system, the uncertainty in the system, the inflation rate, the interest rate is still to percolate to the system. So celebrations happen because lack of selling at this point of time, because the FI is selling kind of pared down, and even PMS selling pared down. So we had a good amount of rise, because it's not because people were buying bulks. It is also because people just stopped selling.
So therefore the question is, what do you do right now? Do you continue to keep powder dry and, as you pointed out, book profits, right? So there will be ample opportunities for stocks that have gone up between 8 and 12 and possibly even 15% over the course of the last couple of weeks. Would you take money off the table selectively?
You know, I love when you say 8, 12, 15%. The dialogue a few years back or 1 year back, 30, 40, 50%. So I think we've come.
But I'm talking about a couple of weeks, Ajay. A couple of weeks.
Oh, you know that. Alex, you know that stock used to go 30% in a good old time. So I think the fact we're talking of 10, 12%, I think is greatly encouraging. You know, it's like this. It's not about percentages. It's about the stock stories. Some stock stories you need to hold for some time. Some stock stories you need to get off when the valuation goes high. And I give you an example. Power is an industry which is going to grow. Okay, it's been lackluster, but it's give you steady return. It's given steady return for last 3 months. We have put a call on power, and it's done steady. It will do well over a period of time. Nothing to worry about there. But when you look at retail of India, that's ridiculous. That's stupid. 80 P's of stocks at P's of 80. I will not. You know, people are not paying Nvidia 80p. And I am paying a kapde wala dukan 80p. Something is not right in this country, and investors love to lose money. So I think the question is not 8-12. Question is, which is the theme you're catching on? How much you have the ability to keep consolidating even if the price goes down? And you see at the end of the 2 year, 3 year time frame that you've done a decent rate of return over your debt rate of return, given the risk that you take in equity. It's not about making 8-12%. You can make 12% in debt today. So if your target should be 20-25% annualized minimum if you want to be in equity market, and therefore latch onto sectors, buy on correction, and see when it goes overboard, you need to book profits. I think, so it's not about 8-12. I think some stocks just need to be sold whenever you can get a chance to sell them.
Ajay, hi, Tamanna here. I'm very tempted to ask which kapde wala dukan.
You should know better than anybody. There's only one stock with a P of 19, a kapde wala dukan. What else can I say about it? You know. So can you imagine investing in money in a kapde ka dukan? I just don't believe it. In today's day and world, we're talking of AI, we're talking of BYD, we're talking of Korea, TSMC, and here are investors saying, you know, let's allocate money to the guy who sells clothes. Are you serious?
What about the guy who sends your food in 10 minutes, 20 minutes, 25 minutes, and your groceries in 10 minutes?
Look at his valuation. What else does he want? All the people who set up the company enjoyed the money. Investors enjoyed the money. Look at look at the amount of market cap it's created for itself. It's the greatest reward I've ever seen for a new initiative, given the fact that profitability dynamics could be shaky and remain shaky at this point of time. But still, the market has rewarded those promoters and investors very handsomely. So if you're coming late to the party, I think you have to wait a while to get the return at this point of time for those kind of stocks. But people who invested early, and even at IPO and around the correction which happened post IPO, you made good money above that. The question is, did you book a profit, or are you still sitting with high price entry? That's the key. Book your profits, guys. This is a market which will be volatile. Technology is changing, competition is changing, and some funny country like Iran can just take you off the rails.
So I'm wondering if you are then as excited about financials as many are?
I was till I read the results of last two banks. I was promised you I had a lot of holdings. And today I just told my team to pare down the holdings everywhere. You know, if you look at look at the performance of these banks, just look at the intrinsically the business volumes, almost flat. There's nothing there. You know, at the end of all said and done, if you make a profit growth of one bank is 8% and other is 11%, and why am I going to put money in this businesses which are going to give me 8 and 11% return at the end of the day? Sure, long term, I think there'll be great buys, because not because business will go up, but because their cost structure will collapse with AI. I think the cost structure will give you the returns. But they are like just not moving. Can you imagine I'm paying a EM premium for a stock, a profit growth of 11 and 8%? I can feel enthusiastic about the share price was 1,200 rupees, it becomes 700 rupees, and therefore I should be great. But no, look at the dynamics. Look at the corporate lending. Look at the retail lending of the two banks. Look at last Q4 and this Q4. You see it's minuscule growth. You know, I'm a buyer of growth stocks. I don't believe anything else. If you're not growing, I don't want to be there with you at the end of the day, you know. And only the stars in a company get promoted to CEOs. The laggards don't get promoted to CEOs. So in my portfolios, I want the stars, not the laggards. Those are laggards. Performance is just shocking if you look at intrinsically what these two banks have done.
Well, Ajay, the argument therefore is that, and I want to ask you a subsequent question. Since you're negative on so many things, where is it that you're constructive on? But the argument for banks might be or is that at 1.5, 1.6 price to book for that growth of 13, 14, 15, 16% that they're giving, they are not a bad bet.
Where is the 13%? I did not see 13 anywhere. At the end of the day, I wish I could see 13 anywhere. And the path to 13% also. I didn't see that, 13%. I think, if I'm not wrong, ICICI Bank at 6 or 8% growth over profit over last year, consolidated, that's what it was at the end of the day. Again, back to the point.
Loan growth.
A very valid question.
I mean,
loan growth, what will I do? I want profit growth. I want profit growth. Okay, I don't want loan growth. I want profit growth. At the end of the day, my money is for earning profits.
Okay,
you're right. It may go up. We all have limited capital, unlike some of our fellows who may have unlimited. Therefore, I need to find appropriate ways to allocate capital to get return in excess of my risk I take for this market. That's my theory. Everything may go up theoretically, but
that's actually a perfect theory, Ajay. That's a perfect theory simply because, yes, you are right. A lot of people who are watching this as well don't have unlimited capital. So therefore, I'm inclined to ask you, you don't like a lot of frontline things, but you want that growth number which is northwards of 20, 25, 30% because that's the risk commensurate return. Where is it that you can find that return?
See, I can tell you what we have done. Models, etc. One is the power stocks. Okay, we have been very heavy on power and we continue to load up power stocks. I think the great story building there at the end of the day. The second big element is our gold loan companies. I think there we see a lot of traction, continued and so on and so forth. A lot of legacy companies, we are focused on legacy companies in auto ancillaries. Those are our two big bets at this point of time.
I think Ajay, maybe just losing you, but if not, I'm inclined to ask you a follow-up there. Power is a very wide theme, right? Where within this energy space are you finding the biggest bang for the buck?
It's thermal energies at that point of time. Okay. Thermal is great, renewable is great. And in fact, it's a beauty is I can't name it, but there's an ETF which gives you a beautiful exposure to all your power companies. You don't have to worry about stocks. It's a brilliant ETF by a new guy and, just load up the power stocks and you're done. If AI has to come in the country, power is going to be the gainer. So, I'm not all pessimistic. Gold loan companies, I love them. I love two auto companies. I love auto ancillaries, great stuff coming there. I have a select CDMO portfolio, but very select at this point of time. I've got capital market stocks because those are monopolies. So it's not all negative, but I certainly don't like anything of north of 50 Ps at this point of time.
On the power theme, I'm wondering whether you've studied the possibility of nuclear being taken up selectively, particularly because of the inclination that the government has shown to rapidly increase the capacity from around 8 gigawatts to 100 gigawatts. That throws up opportunities for large conglomerates. So are you studying that and the value chain and whether opportunities exist there?
Of course not, because I think nuclear is going to be it's like a nuclear option at the end of the day. India to get a nuclear thing going, you just saw Kalpakam just became, after 20 years, it became supercritical. I think it's a very long shot. There's much simpler ways India will kind of now has got down back to the path of saying thermal is okay, we are going to be okay with thermal power. Nuclear, yes, if we're able to import plants, etc., I think we'll go through that. But I doubt it is going to be in the investment horizon of most people. And conglomerates of India, no way. They will not invest in nuclear power because it's much cheaper to make money from renewable under government control or thermal, which has a link to coal power and is the cheapest way. So I'm not even sure whether I think it's a government, NTPC, who will do the nuclear power or nuclear power corporation. I don't think any Indian corporate will have big commitments to make on capital on nuclear power. Also, risk of the company goes up, the accident risk goes up, the insurance risk goes up. So, the whole dynamics changes for a company as a whole, even if you have a small nuclear power sitting there. So I doubt it, nuclear for us as investors is a great option at this point of time. But I look at immediately and say, next 3 years, if AI comes in, thermal power and renewable power is the only way.
Okay, Ajay, just trying to understand where you are constructive. You said a few minutes ago, I want the stars. I don't want the laggards and the also-rans. You've talked about some stars maybe in the power sector that you're constructive. Where are the other stars that you see, and is it more in the broader market space?
You look at go industry by industry, and you'll find, if you look at aerospace, there's a beautiful company out there in Hyderabad, which is there. Now it becomes expensive. So you wait and watch till you can enter it. So we have aerospace, we have component industry, which is engineering industry, which is very good. We have a couple of autos, which have done remarkably well. And even in finance, the old promoter legacy companies, I think these have been the stars, absolute stars consistently. And if you look at one company, India's only one company has been able to get into chip production, but did a beautiful job of restructuring. So there are stars in every industry, and good part, that legacy of these promoters tells you that they have given growth and investor returns for 25, 30 years. That's not the Tata Group which did, that's not any other group. These are South Indian based, most of them are South India based groups, which have given beautiful returns to investors over years. Whether you look at finance, auto, engineering, three big segments, these guys have done an amazing job. Absolutely. So go for legacy companies. You'll have a star in every industry, has one or two stars in India. And I think you'll have to just back the stars and give the promoters who have given good returns, back them up. Don't expect a promoter who's not given return to give you a return because his low valuation can give you a trigger. Value trap can be the biggest trap of performance, as history has shown in 30 years.
Your responses are like a quiz. Our viewers are possibly very quickly listening to you and trying to wonder which, put their ideas together with the clues that you're giving.
You can have a trivia quiz, and I can promise you a lot of good investors will guess it right in first time.
Okay. Now, having said that, I just want to come to the part about good promoters. Are you seeing maybe the IPO rush, which is going to now squeeze down, and that becomes a cold storage kind of situation for the next few months till things settle?
It's a good question, very good question, that the liquidity is going to be impacted in India because three things are happening. One, slowly and steadily, people are realizing that we need to move out of India investment. So whether you look at mutual fund customers, including ours, I think we're allocating more and more capital to foreign schemes. I think that's where the underlying theme is going to happen next 12 months. Allocation to India equity will be a lot less than what will be to global equities. I think in spite of the run of global equities, people are now beginning to understand what is the meaning of diversification. It's not about buying only one market, geography, and different sectors. It's about different geographies. So yes, you're right. I think we will wait and see what happens when these big giant IPOs come to the table. I think the only perhaps relief to my mind is that having sold so much out of India, some foreign investors will eventually turn to India if our valuations make sense on the IPO and other platforms. If we continue to be, ridiculously priced as what we are even today, I think it's going to be crazy. Just give an example, Tamanna. Your Magnificent Seven in the US are all priced at, I think, average of 24 PE multiple, trailing earning PE multiple. Trailing. You don't buy stocks unless you are that much of a correction, and when correction, they were 20 PE multiple. Why would I be paying 40, 50 in India? Every stock is 40, 50 when the growth is local market and the growth is 7, 8% or 10%. I think we have gone down on valuation path. Lot more to happen in mid caps. I think lot more will happen in corrections, and therefore be careful where you invest, because global opportunities will oversee India opportunities.
I'm very tempted to quickly ask you about how you're looking at IT companies now that valuations have come off, Indian IT companies.
Those are dividend guys. So you might as well, the one guy wants to run airlines, second guy is promoters want to run resorts. Just one CFO of a major leading company said, we are proud to tell you that 88% of free cash flows we have dividend out in last 3 years. Slow clap for you, lady, because you've done a great job for India's technology and India's sector. It's just incredible that US 3 companies are going to invest $680 billion this year in capex. And I have a CFO of my IT company deserving a slow clap saying, I dividend out 88% of my free cash flows. Would you buy that stock? Sometime I want to ask you guys, would you buy somebody like that who wants to give 88% dividend in tech when the world over investments are running at $680 billion in 3 companies? Would you buy the guy's stock?
Yeah, you know we can't answer that, Ajay, as much as
No, you can.
No, we can't. We can't answer those questions as financial journalists at all, as much as you can't name names. So, but I think ishara hi kafi hai. Ajay, we've run right out of time. This was.
Thank you so much for your time.
This was a fantastic conversation, Ajay Srivastava.
Thank you very much.
As always, all guns blazing. These are so our sense over here, and our job is to get you all kinds of views, and then you decide what you want to do. Huh?
Yeah. On that note.
On that note, that's all the time we have. Thank you for all of us here on the table and all of those who helped put the show together. Stay tuned. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ खास होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hello and welcome back to NDTV Profit. You're watching Our Profit, a show that answers all your stock-related queries. My name is Puneet Zaveri. With me today, as always, is Mahima, and over the next hour or so, we'll try and solve all those stock-related queries. So do start sending them on the numbers that is flashing on the top of the screen. You can also call us, speak to us directly, as well as to our guest on the stock-related queries as well. But before we do that, it's a very quick check of the markets, because an interesting session today. We started off mildly in the red and then bounced back and now back in the green. So the Nifty at 24,400 odd levels, just about an 83 to 90 point uptick. So the implied open, while not all as accurate, it is at this point of time at least. It showed an 80 point uptick in the implied open today in the morning. So that level has now come back yet again. In the heat map, of course, the banking names continue to dominate the news flow today. ICICI Bank, stellar results over the weekend. You had brokerages continuing to maintain their positive view on the stock, and it's now one of the top 3 gainers in the Nifty 50 trend, buzzing on the back of a bonus issue potentially on April 22nd. And so is SBI, possibly expecting some better performance given now results of ICICI Bank visible now. Axis also is one of those candidates that starts to see an up move based on what's been the news flow on ICICI Bank. But definitely HDFC Bank, while the results were all okay, not the greatest, but nothing too bad, is also another stock that's in focus today. Jio Financial down, the top Nifty loser today on the back of earnings as well. But largely 30 stocks in the Nifty 50. HDFC Bank, that's the only one you can see in blue today. Almost flat at this point of time on the Nifty 50, but started off in the red for this counter. In terms of the sectoral heat map as well, we continue to monitor Nifty Metal as the key basket. Nifty Energy is also the other one that's been continuously showing positive trends. But the PSU Bank and the Nifty Bank are the top gainers for today. Realty seeing some profit booking of what we've seen in the last few days, but a very interesting session nonetheless. Finally, the advanced decline ratio is also the other one that we continue to monitor. The broader markets are showing strength, and that has been the case. It's been a crisscross kind of a pattern. From the day's low, we've started to see some recovery yet again on this broader market index, and Mahima, that is visible in the mid cap and the small cap ones, but there's a lot of interest coming in on the micro cap names as well. And I think in the morning, a view from Gautam Shah told us that it's been almost a 15% run up on that index, but a very interesting session just before the earnings starts.
Absolutely, and I think the point that he made with regards to metal is that he still remains bullish on metal. I think he said the same thing a year ago to NDTV Profit, and that has kind of shown the ways, all of these counters in the metal space have gone up. Hindustan Copper, Nalco, etc. Right? Zinc, Hindustan Zinc as well. But talking about the broader end of spectrum, right now slightly moving towards the bearish momentum as per what the charts were indicating for the advanced decline ratio. The mid cap 150 is still mirroring the benchmarks right now, but the small cap 250 is almost flat as we speak, but recovered a lot from its day's low point. Let's quickly pull up the BSE 500 and then start taking your stock related questions, because there's a lot of stock specific action happening in that space. SW Solar, of course, on the back of the order win, coming in a huge order win on the back of, I'm sure Samir would be really happy today, up 13%. Prism Johnson up 10% as well. Triveni Turbine, VMart, BHEL are some of the names which are seeing strong gains. IEX on the on the news flow coming in on market coupling down by about 6% Embassy Developers, Mastec are some of the other names which are seeing the downtick of in the range of 3 to 4%. But let's start welcoming our guest for the day. We're joined by Tapan Doshi, research analyst at CATapan.in, and Gaurav Sharma, associate VP and head of research at Globe Capital, joining us now. Welcome to both of you, gentlemen. Thank you so much for taking out the time. The first question that we have, I think, is a caller. Anjali is calling us from Hyderabad. Anjali, a very good morning to you. What's your query about?
Yeah, hi ma'am. Good morning. Thanks for taking my call.
Go ahead, ask your question, Anjali.
Okay, sir. Okay, ma'am. I'm having Ashok Leyland shares at the 2000 shares at the price of 154. So, shall I hold, or what is the target price to exit? Both short term and long term view, I want to know this.
So, Anjali, when you bought this, did you see the charts while buying the counter?
Yes, ma'am. Yes.
Okay, all right. Then I'll take this up with Gaurav. Gaurav, very good morning to you. Your view on the charts for Ashok Leyland?
Hi, Mahima. Very good morning to you as well, and thanks for having me on the show. Stock is looking upbeat. Only a breakout above 180 is pretty much warranted here for a smooth sail towards 190, 195 odd level. I'll advise the viewer to hold on to a position, take a stop at 165.
That view, Gaurav, and welcome to the show. The next question coming in now is from a viewer on SBI holding roughly about 100 shares bought at 805. So definitely sitting in a lot of profits right now. Stocks up crossed above the 1100 mark as well for the first time post this correction that we've seen also nonetheless. So SBI up today 3.2%. Now our viewer largely asking if she should continue to hold this counter or book profit. Not mention the time frame, but Tapan, good morning, welcome to the show. What would you recommend on SBI after ICICI earnings? You would be positive, right? Should she continue to hold?
Yeah, good morning, Puneet. Yes, of course, she should hold now because if you see the bank's results are coming out, even the PSU also from last few quarters are doing well, and among them now SBI is the top contender. I think this quarter also they will do well. Their credit growth is good, so I'm quite positive. Please hold this stock at this level, and at dips she can buy more.
Okay, all right. So that's the view coming in on SBI. I think we've got our next caller. Aruna is calling us from Bengaluru. Aruna, very good morning to you. What's your query about?
Yeah, very good morning, ma'am, and all of you. Thanks for taking my call. I'm having Oracle Financial Services shares of 100 quantity with the price of 8,200.
Okay.
So basically this IT, I bought almost 8 months back, ma'am. So by the time the IT issues are not there. So now if my price comes, shall I exit my shares or hold at least for next 6 months? What is at least can I get 10% return?
Got it, Aruna. Got your query, and I understand your concern as well. I'll take this up with Gaurav then. Gaurav, she's sitting on a loss of 17,000 rupees. Wants to know if she can at least recover and maybe see some upside post recovering those losses in the next 6 months. Do you think that's possible?
Mahima, OFSS has performed exceptionally well in the past 1 month. Just to share some data with the viewer, this stock has rallied nearly 20% in the past 1 month against a 9-10% up move in Nifty IT index. So this clearly goes to show the kind of outperformance the stock has posted. Going ahead too, I expect the stock to sail up towards 9,500 mark in the next 2 to 3 quarters. So the advice would be to sit tight. If at all to contain some risk, she can take a stop at 7,200 now.
7,200 could be a level, but 9,000 overall is what Gaurav is watching on OFSS. The next counter coming in now from Kalyan Jewellers. Lalita from Bangalore, who's a regular viewer of the show, is holding shares at 415. Now currently sitting, let's pull up the counter now. Stock's trading at 421. Now her question largely being, what should she continue to hold this particular counter or buy or sell? Gaurav, on the charts, because we've seen fundamentally Q4 very strong positive update. We're still awaiting results, but anything on the charts? Is there any up move there in the near term?
Charts are not moving in tandem with the kind of results the company has posted. Rightly pointed out, it has posted a decent quarter, December quarter. Charts suggest that it will resist somewhere around 450, 460 zone. I would suggest booking some profits around the higher points, 460, 470 odd levels, and switching over to positions in Thangamalai. This is something really very better placed.
Interesting. Both fundamentally as well as technically, we've been talking to Kush about this counter. Both analysts seems to be positive on Thangamayal coming in, and look at the way it's moved in the past 1 year, right? Over 120% of gains is what we've seen on this counter. But moving on to the next one, and this is an interesting one because Raghuram from Bhubaneswar is asking this question, wants to know if this is the right time to enter Sterling and Wilson from the next 3 to 6 months perspective. Gaurav, today, of course, it's buzzing on the back of the big order win that's come in its way. A 4,000 odd crore market cap company has gotten an order win of around 3,500 odd crore. But overall, from a charts perspective, because this stock has seen a lot of beaten down, do you think that now there's chances of bounce back coming in?
Yes, Mahima. Inevitable signs of a upside reversals are there. The stock is looking upbeat. The only resistance lies that it is still trading below its 200 period exponential moving average. I think this should be crossed very soon. 237 is the price point. Once that is taken out, it will rush up towards 260 and higher levels. Hold and add is a suggestion that I'll put up for our viewers.
Got that view, Gaurav. But let's go across, take another query now from Jaipur. And Yogesh actually is calling us now. Yogesh, good morning. Welcome to the show. What's your query?
Good morning. Good morning. Good morning, sir. Actually, my query is I buy a Hyundai motor share, 1,648 rates, 500 shares.
Okay.
And I'm not a short-term investor, but it's a give handsome return in a very short term. So what I do for that?
And
That I want
Yogesh,
to anyone.
Yogesh, on Hyundai, did you buy it in the recent fall or have you been holding it for the last...
recent fall.
Okay, recent fall. Then you bought it at a very attractive rate of 1648 and got your view as well. But Tapan, on Hyundai, we've seen 2 years of consistent degrowth in the domestic market. Should Yogesh book his profit or wait for Q4 earnings, see what the trajectory is for next year in terms of launches and then take a call?
No, he entered at a very good point. No, I think he should hold on the stock, wait for 1 or 2 quarter results. The reason is I think the company will be doing well. Even the monthly updates are okay. I think the margin may increase over the time. So better to hold for 1 or 2 quarters than only do something on this one.
Okay, so that's the view coming in on Hyundai, but the next one is coming in on Sky Gold. Utkarsh is asking this question. He wants to know whether he can continue to hold this from a long-term perspective of 1 to 2 years. His buying price is 370 and 10,500 shares is what he's holding in his portfolio. Tapan, I'll stick with you for this one. Your view on Sky Gold, because he's sitting on handsome profits right now considering the quantity that he's purchased.
Yeah, first of all, congratulations to him. And of course, this counter looks good. If you see the business updates, even if you see the quarterly result, it is good. And I think the valuation is also okay, not so expensive compared to the counterparts. Please hold on to the stock. I think this will do well in next few quarters.
Okay. 5,35,000 is the profit. I was just trying to calculate as to what profits he's sitting on. But continue to hold is the view, of course, coming in. I think
it's also interesting on Sky Gold because you spoke about Thangamalai also, and it's also because the larger player Titan has also started to outperform so well.
And it has, right?
And it has in terms of numbers. So you're seeing the valuations on the bottom end of those players also starting to show such strong growth.
Yeah.
So definitely it's going to be a busy quarter for you in this one. But go across, take the next query. Now we spoke about Hyundai, which was a query from Yogesh to Tapan. But Tapan, on from Nagababu from Andhra Pradesh also, he wants to enter Mahindra & Mahindra for the next 3 to 5 years. Now there's largely a positive consensus buy on this particular counter. But what is your view now? Because we've seen, the EV portfolio do very well in the last 1 year. They've jumped now to number 3 position there, and the number 2 position also not too far away. How are you viewing this counter now, and what are some of the key triggers?
Yeah, of course, this counter will do well, and if he is holding for 5 years, he is going to hold for 5 years, then I think it's a no-brainer. I think for Mahindra & Mahindra, their EV, you can say segment is doing well, and the new models also having a good lineup. So I think he can hold on to his stock. Even the margin improvement will be there over the time. So I am positive. I think hold on for next 5 years, no problem.
Okay, all right. So that's the view coming in with regards to where M&M goes. The next one that we have is coming in on Geo Financial. Our viewer Sivakumar from Bengaluru has bought 40 shares at the levels of 365. Says that overall he's incurring a loss of around 34% on this counter. Wants to know if he can go ahead, sell this and shift to something like a Bharti Airtel. Gaurav, I'll come to you on this one. Today, of course, on the back of the weak Q4 numbers coming in, overall this stock is seeing a downtick. But from a charts point of view, would you recommend him to book his losses and shift to something like a Bharti Airtel? He's also mentioned that if not Bharti Airtel, any hospital stock that you like.
Yes, certainly GF Financial has been an underperformer since its listing. No doubt on that part. All recent attempts of recovery have failed. Still, it is consolidating in a range. What I can see is a break above 250 can take the stock toward 260, 263. Then again, some resistances are placed around 270. So it won't be a smooth sailing anytime soon. Therefore, shifting towards a Bharti Airtel, yes, it is a very good choice. My personal favorite, no brainer at all. Apart from that, he has also asked for some of the hospital stocks. So we track only the two of them, that is Apollo Hospitals and Fortis, and we remain bullish on both of them. So he can partially add up towards a Bharti Airtel and Fortis for that.
Got that view, Gaurav. And this was also another question from Akshay as well, similar on Geofinance. And I think hopefully this question and this response from Gaurav helps you as well, Akshay. But time now to dive into the BSE FNO setup, and Sharad is joining us exactly to do the same. Sharad, good morning. What are you picking up?
Good morning. We see largely a very range-bound day of trade happening, and of course we are seeing the developments in the geopolitical space as well. The VIX also has jumped up almost 5%, but largely earnings-driven movement is there. Trent, SBI and Asian Paints also holding the fort. Important news flows coming in. Reliance is in the green as well, but what's not working is Infosys, Titan, HCL Tech. That's where a little bit of sell-off is there. But remember, the markets are likely to be in a very tight range, at least in this today's trading session as well. Let's see how BankX is panning out, and largely we see ICICI Bank is holding the fort. HDFC Bank is largely unchanged, very volatile, but SBI is doing well. It's up 3%. Let's see where the long build-up is there. To give you more clarity about the stocks which should be on your radar, BHEL and Torrent Power, these are the defense and the power related companies which are doing well in trade. And if you look at the short covering candidates also, we have Trent, the stock is up 4%, important corporate development coming in. And the summer theme which we are talking about, Voltas is also seeing good buying, stock is up more than 2%. Long unwinding for Hindalco and KPIT Tech. And let's look at the short build-up, where the action is in India Energy Exchange. That is where a big short build-up is there. Volumes also picked up. The stock is down 7% in the trade, followed by Geo Financial. Also, the stock is down 2%. So these are the stocks which are buzzing in the FNO space.
Okay, all right, Sharad, thank you so much for getting us those details with regards to where the FNO setup goes. But we've got our next caller. I think Anita is calling us from Hyderabad. Anita, very good morning to you. What's your query about?
Yeah, very good morning, ma'am, and all of you. Thanks for taking my query. I'm having Bajaj Finance shares of 400 quantity, price of 1015 average, 1015.
Okay.
So, shall I hold in the short term? My price will come, or exit? Oh, how exactly the plan, or should I average more? Just wanted to know, ma'am.
Okay, 6 months is the time horizon, right?
Yes, ma'am.
Okay, Anita, got your question. I'll take this up with Gaurav then. Gaurav, the stock is currently trading at 914. She wants to know if in the 6 months she can get back to her price at least, that is 1015. Do you think that's achievable on the charts?
Yeah, 10-15% move in Bajaj Finance in the next 6 months. Yes, it is possible. Still, considering the chart pattern, the stock seems a little struggling around these levels. 940 adds up to the confluence zone of its medium and long-term moving averages. That's the only concern. So, as far as averaging is concerned, I'll suggest her to average at 960 odd levels. As of now, take a stop at 860, hold your position. Your levels are pretty much achievable in the next 6 months.
Got the view, Gaurav. But viewers as well as Tapan and Gaurav, it's now time for the rapid fire round in this edition of Fast Profit. You both know the drill. The first question coming in from Sunil Kumar. He is holding shares of JSW Energy, bought at 533. Gaurav asking, should he continue to wait? He bought it a year ago, or should he exit now?
Wait, stock is likely to go up towards 600 anytime soon.
Okay, the next one is on Enviro Infra. This is from Lakshmi Narayan, who's writing us from Vijayawada. Wants to know if this is the right time to buy from a long-term perspective. Tapan, your view?
Well, the stock has run up a lot, so wait for the dip. At least around 180 something she can enter. He can enter.
On Embassy Development, also the other counter, our viewer has bought shares at elevated levels of almost 100. What would you recommend, Tapan, here?
Do not enter now. Wait for the consolidation.
Someone already holding, Tapan?
Holding, then just hold currently.
Okay, Apex Frozen Food is the other one. 1,000 shares bought at the levels of 378. James want to know if he can continue to hold or sell from a short-term perspective. Gaurav, your view on the charts?
At least 60% of your position remaining hold. Take a stop at 440.
For Electra Green Tech, Gaurav, Soumya from Bangalore holds 10 shares at 1023. Should she book her profit now?
No, I think she should hold on to a position. A bright future lies ahead. Levels close to 1350 to 1400 zone are pretty much available in the near term.
Okay, Bellrise Industries bought at the levels of 177. 600 shares, 1600 shares is what Ashwini from Chennai is holding. Wants to know the short-term target on this one. Gaurav, on the charts?
Clearly, it is on a very strong upward move. Take a stop at 210. Hold your position. Keep trailing with every rise.
Jeff from Goa holds 129 shares of Premier Energies at 801. What would you recommend here, Tapan? Should he continue to hold?
Yeah, currently hold it.
Canara Bank is the other one. Arvind from Mumbai wants to know whether the price can touch 185 or 200 by the end of 2026 or early 2027. Gaurav, possible on the charts?
And it's better to go step by step. As of now, I can see 160, 170 zone.
Okay.
So that is achievable.
Srinivas from Hyderabad actually holds 500 shares of PNB bought at 67. Now, Tapan, he's bought it for the long term. He's asking if he should continue to hold or book his profit now.
Well, congratulations for the profit. No, hold for 1 or 2 quarter more.
Tapan, good time to enter ICICI from a long-term perspective?
No.
G. Varnova, Tapan, a good time to enter for the next 1 year is what Jeet is asking. We also had a initiating coverage note from Motilal, but what's your view?
Yeah, it's a good stock. You can enter.
MRPL or Chennai Petroleum, which one is better from a 1 year perspective where charts are concerned? Sabu from Kerala wants to know. Gaurav, which one of these are you liking? MRPL and Chennai Petroleum?
The neck-to-neck competition. Any of those, very difficult choice to make.
Sanofi Consumer Healthcare, Gaurav, what are our viewers Sunny at 4,200? What would be your view on the stock now in the short term?
You should consider switching it over. I don't see any good value coming in soon. Dr. Reddy's and Cipla, Lupin, they are better placed.
Okay, sticking to the healthcare space, Tapan, this one's for you. Good to make fresh entry in Max Health or Narayana Hrudayalaya or Apollo Hospital? Which one of these are you liking?
I think Narayana Hrudayalaya.
NTPC Green, Abdul Rashid wants to know if it's a good time to enter for the next 1 year, Tapan?
No, better to go for NTPC.
KRN Heat, 25 shares bought at the levels of 928. Kishore from Chennai wants a 6 months view on this one. Gaurav?
Some dip is pretty much possible. 1150 to 1100 is a better entry zone for this stock.
Okay.
Muralidhar has bought into Aisha Motors at 7128. He's holding 44 shares, Tapan. He's asking if this is a good buy and should he continue to hold?
Yeah, please hold this stock.
Well, that's the end of the first round of the rapid fire in this edition of Ask Profit. Tapan, stay with us. Gaurav, thanks so much for joining and giving us your views over the last half an hour or so. Appreciate your time here. But viewers, time for a very short break. A lot more stock related queries on the other side. Stay tuned.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated-listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Sell Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी
सफल बनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New Year, new power panel.
Right, welcome back viewers. You're watching Ask Profit here at NDTV Profit. For viewers who just tuned in, you can either give us a call or send us a WhatsApp message related to all your stock related questions, and we'll be more than happy to answer them. The next question is coming in from Priyanka, who's writing us from Mumbai. She's bought 450 shares of Hindalco, bought at the levels of 1032, wants to know as to what should be the next course of action for her. She's not mentioned the time period here, but from her previous chats, I'm understanding that she's a long-term investor. So Tapan, I'll stick with you for this one. Hindalco, what's the view like?
If you see, the stock has gone up again, and but the overall the financials looks okay. Even the margin, I think that there will be improvement in next 1 or 2 quarters. Talking about the metal sector is doing good, so better to hold this stock for 1 or 2 quarter more.
Tapan, let me also welcome Ajit Mishra, SVP Research at Relicare Broking on the technical side. Now, Ajit, very good morning. Welcome to Ask Profit. Just a quick first question coming in from Priyanka from Mumbai. She's holding 450 shares of Hindalco at 1032. Now asking, okay, sure, just take this question. Let me go actually take the other one now. This one's coming in on Yes Bank. Krishnan actually is holding 10,000 shares at 20.9 and he's from Chennai. Now, Ajit, what's your opinion now? Because we've seen the results largely being okay, stocks not reacting too much, brokerages not increasing too much in terms of target prices, a new CEO at the helm. On the fundamentals, on the charts though, this one's a better question to ask you, right? What's your view now?
Yeah, good morning, Puneet. So Puneet, what we are seeing is that it's been almost like several years now that to be precise means since 2022 we are seeing this band continuing in Yes Bank largely, like 25 to 16 is what it's been hovering in. Currently, we are in the middle of the band, but the underperformance, if you compare it with the other private banking majors and PSU counters, it's a clear, decision that in case if somebody is sticking his guns to an underperforming name, we may see a rebound every now and then, but a sustained recovery or up move is missing. So my opinion, since he have bought it at very close to the current levels, the prudent approach is to exit from this and look for buying opportunity in ICICI or Axis Bank.
Okay, all right. So that's the view coming in on Yes Bank. The next one is coming in from Biju, who's writing us from Chennai, asking about the pharma space. He says that he has 40,000 to invest in, wants to know whether to invest in Dr. Reddy's, Cipla or any good pharma counter that you're liking. Tapan, your view on this one?
I think Cipla will be a better counter to invest now, because if you see the stock has already come down a little bit, and if you see the valuation looks okay compared to the counterparts, and their US sales and Europe sales are going up, some patents are also coming. So just go for Cipla.
that view, Tapan. But the next question coming in now from Sameer from Srinagar. Sameer, good morning. Welcome to Ask Profit. What's your query?
Morning, sir. Morning, sir. Sir, I have got Thyrocare Technologies, 1500 shares. 1500 shares at the rate of 440.
Okay.
440.
And did you buy this for the long term, Sameer?
No.
Short term. Okay.
For short to medium term.
Got it. Ajit, on Thyrocare, another very volatile counter in that sense. What's your view now for Sameer? He's bought it at 440.
So as you rightly mentioned, Puneet, it's a very volatile stock. Means in past also we have seen the stock witnessing volatile swings both on positive and during the reactive side as well. Now we are seeing a recovery phase. Means the stock is hovering around its long-term averages. So probably a break above 410 can help the stock to trigger further recovery towards 440, 460, his buying area. So around that area, he should review his position. Largely, it looks okay to us, but upside, from short to medium term perspective seems capped. So around 420, 440, he should review his position. And in the interim, 370 should be his stop loss as well.
Okay, all right. So that's the view coming in on Thyrocare. The next one is directed towards you, Ajit. This is a viewer query from Prashant, who's writing us from Bengaluru, asking about the charts for BSE. He says that, in fact, let me take his entire question. It's on capital markets. I'll give him that leeway. Puneet here is laughing, but basically he's saying that he does not have any position in capital markets portfolio. He wants to know as to what is the best bet right now from a charts point of view and what is the best entry point. He's talked about BSE, CDSL, MCX as well as HDFC AMC. Wants to know which one is better amongst this. Ajit, I know you'll take time to pull these charts up. But if you've already seen charts for any of these counters that you like right now, which makes sense to make an entry?
So all these counters, Mahima, they have done exceptionally well in this recent leg of rebound. We are seeing that BSE is quoting at the record highs. CDSL is slightly on the back foot, but yes, we are seeing gradual recovery from CDSL as well. HDFC AMC also inching towards record high zone. So this entire theme, MCX is anyways trading at the record high. So the entire theme is participating in this recovery, which is a good part. BSE is outperforming at present, means we are seeing every passing day helping the stock to inch towards a newer high. For fresh buying, short-term buying, HDFC AMC looks comparatively better because we still have room on the further upside, means the stock has reclaimed the long-term averages of late. Candles are decisive, volumes are very strong. So all this indicates this momentum is here to stay. So 3000 is what we are eyeing in the near future, record high area as an immediate target, and 2650 zone is the buying area. So he can look for a fresh long position even at current levels and add more in case if it witnesses any dip towards 2700 mark. For the entire position, his stop should be at 2600 and 3000 is the immediate target.
Well, thanks so much for that, Ajit, giving us a detailed view across the whole bunch of space. And the reason I was laughing because you're a taskmaster in that sense. You cut down the stocks only one at a time in that sense. So that's the reason why I was laughing.
You have to be fair to all our viewers.
Fair to all, yes, you're right. And that's why we started a second edition also of Ask Profit at 2 p.m. But go across to, actually, let's take our next caller query from Bengaluru. And this is also Prashant dialing in from IDFC First Bank. Prashant, welcome to the show. What's your query?
Hello everyone, good morning. I hold about 500 shares of IDFC First Bank at 70.50. Should I hold it for long term or should I stick to short term? What's the prospects of this?
And Prashant, do you have any other banking names in your portfolio or is it only IDFC?
This is the only one.
This is the only one, got it. Well, Tapan, stock's been, post what we saw some issues propping up in this quarter, in that range only, right? It's not recovered. Would you recommend, Prashant, to continue holding IDFC or move to a better banking name?
No, my take will be better to move. The reason is whatever in last 1 or 2 quarter happened with IDFC First Bank, of course the governance issue also. So it's not so great. Again, lot of talk is there from the IDFC First Bank management, but they are not able to deliver. Many good private banks are there, they are able to deliver. So I think better to move around 70 if its price comes and go to better private bank or even PSU banks. I think that will be good.
Okay, all right. So that's the view coming in on IDFC First Bank. The next one that we have, and this is a query that I'm sure Samir would have loved to answer again. But I mean, I just can't think about SW Solar and not think about Samir, right? But this is from Satyan, who is writing in, and he says that he's got Apollo Microsystems holding since when it was 260. Wants to know if there is further upside for this one, or profit booking makes sense on this one from a medium term perspective, or switch to something like an SW Solar. Ajit, I'll stick with you for this one as well. Your view on SW Solar versus Apollo Microsystems that he's holding right now.
So in my opinion, Mahima, he should stick his guns with Apollo. Means for the obvious reason, because when it comes to the outperformance during the recovery phase, herein the stock is showing noticeable momentum with volumes, and we are just like 5 to 6% away from these recent highs as well. So this clearly shows momentum is in the favor, and what he can do is he can maintain a trailing stop loss now. Means 270 is something that he can maintain as a trailing stop loss for this position, and 330, 340 is something that he can consider as the targets. SW Solar is also witnessing traction, very strong traction rather in today's session. The stock is up roughly around 15%. Volumes are almost 5 times of the average volume, but it's still trading below its all long-term averages. So we have hurdle at 230, and once we surpass this, then probably this recovery may further extend. But comparatively, if somebody has to hold it for a medium-term perspective, Apollo Microsystems looks comparatively better.
Stocks also up almost 24-25%. Apollo Microsystems got that approval for ammunition manufacturing in India, has sizzled through in that sense over the last 2 days. But let's go across, take another caller now from Vijayawada. Balaji has a stock query for us. Balaji, good morning. Welcome to the show. What's your query?
Good morning. Good morning. Thank you. Actually, I have exited Interglobe Aviation recently at 4,100 rupees per share.
Okay.
Actually, I was a long-term holder for Interglobe Aviation, but after the recent news and other things, I have exited. I wanted to enter it again, but I couldn't. The price has rapidly
kept rising, correct. Balaji, do you want to enter the stock now yet again for the long term or for the short term?
Yeah, for long term only. Should I wait for dips, or should I buy it at the present price?
Well, it's a very fair question, Balaji. Tapan, what would you recommend to Balaji? Is it a good time to enter Indigo? Probably just put your feet in the water, or wait for some more time, see some correction, and then buy in?
No, my take will be better to avoid Indigo. No, lot of if whatever thing is happened in last 1 quarter is not going for Indigo. Again, margin pressures will be there. Again, flight operations slowly and gradually coming up, but it will take time. Again, the government is behind Indigo somehow, so operation costs will go up. So, my take better to have a lot of uncertainty. I think better to avoid complete aviation sector, if I want to say.
Okay, all right. So that's the view coming in on Interglobe as well as the entire aviation space. The next one is from Sneha, who's asking about City Union Bank. She's bought 20 shares at the levels of 129 and wants to know from a short-term perspective whether to hold or sell. Ajit, your view on this one? She's sitting on a mild profit of around 2,800 rupees.
Yes, Mahima, but on a very limited quantity. So she has done exceptionally well, and now the stock is set for the next leg of the year move after this marginal retracement towards long-term averages. So this recovery followed by the continuation of this move with volumes indicates a gradual up move towards 300, 310. So that's the immediate target. So if the view is short-term, now since she has already invested decent amount of time in this stock, she can consider booking profit around the record highs area and switch to the private banking majors like Axis and ICICI once she books the profit.
Got your view, Ajit, but let's go across, take another caller now from Karnataka, and Venkatesh has a stock query for us. Venkatesh, good morning, welcome to the show. What's your query?
Good morning, sir. Good morning. Sir, my query is on Oswald pumps.
Okay.
I have holding of 1 lakh investment in Oswald pumps.
Okay.
I have corrected minimum nearly 40 to 50%, sir. 40%. That's why I want to query about it.
And Venkatesh,
I have bought on IPO, sir.
Okay, you bought in the IPO, got it. But Venkatesh, this position itself is almost 6.2 crores in one stock. Is that your whole portfolio, or do you have some other stocks also in your portfolio?
No, sir. Other also is there, sir. Oswal Pumps is ज़्यादा है.
Okay, Oswal Pumps ही ज़्यादा है, got it. Well, Venkatesh जी, पहले तो आपका पोजीशन इतना बड़ा है, उसके लिए congratulations. But please एक स्टॉक में इतना वेट मत रखिए, स्पेशली क्योंकि वो काफ़ी स्मॉल कैप, मिड कैप्स में वो एक हो सकती है दिक्कत. बट तपन, ओसवाल पंप्स पे आपका क्या व्यू है? बिकॉज वेंकटेश की क्वांटिटी बहुत ज़्यादा है. ही इज बॉट इट एट 625. स्टॉक ने रिकवर किया है 290 से 420. बट क्या व्यू रहेगी आपकी?
नहीं, फर्स्ट ऑफ पुणे जैसे आपने बताया कि पोजीशन कुछ ज्यादा ही बड़ी है, आई थिंक उनको रिस्ट्रिक्ट करनी पड़ेगी. आई थिंक ऊपर आता है तो प्लीज थोड़ा पोजीशन कम कीजिए. इट विल बी अ मार्केट परफॉर्मर. ऐसा नहीं कि सडनली भागेंगे. क्वार्टर टू क्वार्टर रिजल्ट देखिए आप. एंड मेरे हिसाब से आई थिंक मोर देन 50% पोजीशन कम करके किसी और स्टॉक्स में जाए तो बेटर रहेगा. काफी सारे हम लोग सेगमेंट बात करें, लेकिन अभी होल्ड कीजिए, लेकिन धीरे धीरे डिक्रीज करते जाइए आप पोजीशन अपनी.
Okay, so that's the view coming in on Oswal Pumps. I think what Puneet said, just for the sake of repeating it, it's very important for our viewers to understand that, concentration in that one mid cap or small cap stock, is not advisable. You should diversify your portfolio and not just hold one portfolio with a big amount going forward as well. So keep that in mind, because 6 crores, right, is the overall position that he has.
2 crores right
and
now,
loss is already 2 crore rupees. So keep that in mind, Venkatesh, going forward as well. But moving on to the next one, I think Raju from Tirupati wants to know about Godfrey Phillips, wants to know as to what will be the right entry levels from a slightly long-term perspective. Ajit, what are you seeing on the charts?
So Mahima, correction seems over now, means we are seeing a phase of consolidation after this retracement from the record highs from 3,800 to 1,800 mark. But the momentum is still missing. So in case if he is planning to accumulate, let's say from medium to long-term perspective, the range could be close to around, let's say 1,900 to 2,200, the current price area. And for fresh momentum, this once this stock surpasses this 2,450, 2,500 levels, then probably we will see the next level of the up move towards 2,800, 3,000 levels in the coming months. So as of now, he can start accumulating, but wait for any dip towards 1,900 to add more.
Also, Ajit, before we move on, just your quick view also on Oswal Pumps, because just the position itself of Venkatesh was so big. On that counter, if you can give some view, because I know it's a very recent listing. IPO is also very recent, so there wouldn't be too many historical evidence, and it's been so volatile also, right? Went till 800, corrected to 290. Any view on the stock?
So Puneet, first that he said that he bought it in IPO.
Yeah.
So such quantity in IPO, it seems slightly off. But having said that, the kind of decline that stock has experienced post the initial up move, post the IPO, it's a very volatile stocks to be in. So let's say in case if we manage to hold this area close to around 420, 25, then probably 475, 500 is something that the stock might attempt. On the downsides, the support comes around 370, 365 area. So still 50 points down. So still we have 1:2 kind of a ratio, when it comes to the holding the current position at current levels. So he can continue to do so, but around 500, definitely he should revisit his position.
Most certainly. And so 4,780 crore market cap, that's almost 11.3 crore shares in terms of the overall, the current number of shares that are listed. So, and a lot of positioning. So Ajit, point well made. Probably, I think what we were discussing, that could have bought on the first day of the listing around that price, but most certainly a key one. And hopefully, Venkatesh, this helps you a little bit more. This view coming in from Ajit. The next one also coming in from Murli from Bangalore. He's holding shares of Gen Resource Recycling. It's a counter that's done well for investors. He's bought it at 410. Asking, if it's good enough because of the ROE profile as well. Should he continue to hold this particular counter? Tapan, what would be your view on the stock now? Is it better to hold this or switch to Gravita in the same sector?
I think hold this stock currently as is already at a position. If you see the quarterly results are okay, coming okay from last 1 or 2 quarters, and I think the demand will be there. So yes, currently you hold it, but revisit in 1 or 2 quarter results what is happening, then you can take a decision.
Okay, all right. The next, I think we've got a caller. Pawan is calling us from Karnataka. Pawan, a very good morning to you. What's your query about?
Yes, I have shares of PMM of 830 quantities, and currently it is running with 20% loss. So, do you ask me to wait or hold it or sell it?
Sorry, can you repeat the stock name for me?
VMM.
Okay,
Vishal Mega Mart.
Okay, got it. Okay, and you are looking at this from a long-term perspective, or did you see the charts?
Yes, long term.
Long term. Okay,
Long
then
term.
I'll stick with Tapan. Tapan, right now he's sitting on a loss of around 21,000 rupees. You know, these tier 2, tier 3 players, retail players have done exceedingly well, sitting on a very high base of growth. But yet, as per the business update coming in, they are still doing well on a high base. Would you recommend him to continue to hold this one?
So the valuation is quite high for this company, and if you see, they are facing a tough competition from quick commerce and all that. I think in future, maybe after 6 on 1 year, no, they'll not able to maintain this type of margin. So my take is that once it comes on, better to get out from this sector, because they are much more on offline stores. So better to go to the other sector, because there the competition will be bigger in future.
Got the view, Tapan. The next query, and it's about time we get a question on HDFC Bank. Our viewer Vicky is holding shares at 910, holding 500 shares, asking if he should hold on to this counter or sell. Tapan, how did you view the results? Is it largely that continuation of the strategy that the management mentioned in the last quarter, and are you convinced that FY27 will be a better year compared to 26?
I think better options are available, Puneet, here in the private banks, particularly ICICI Bank. If you see this, even though the HDFC Bank has come up little bit after the recent whatever take was there from the management, but I feel that in future the credit growth for like ICICI and Axis will be much better than HDFC, and even the NPA control and all that. So yeah, better to switch compared to HDFC Bank.
Okay, the next one is on data patterns. This is from Ronak Jain, who's writing us from Udaipur. He's got 912 in quantity of data patterns at the levels of 3310. Wants to know a 3 months view on this one. Ajit, your view on the charts?
So Mahima, in fact, the entire defense basket is doing well. Data pattern is trading at record high, so you can continue to stay put. It's just that we are retesting the record high area, so we may see a bit of a consolidation. So his trading stop should now be at 3300 mark, the short-term moving average area. And once, let's say, we cross this hurdle at 3600, then 3900 is probably the target area. So with the short-term view, you can consider booking profit around 39 mark.
Got your view, Ajit. The next question now coming in, it's from Baswaraj from Bangalore. He's purchased into Associate Alcohol shares at roughly around 932 rupees. Let's pull up that counter now, and he's holding roughly 141 shares. So he's currently sitting on a loss. Asking what he should do with this counter now. Ajit, should he continue to hold on or exit this counter now?
So see, short-term view looks sideways to slightly bearish. So in case if the view is short-term, he can consider exiting.
Okay, all right. So that's the view coming in on Associated Alcohols. The next one is on TCS. This is from Jeevan, who's writing us from Hyderabad. He says he's bought 70 odd shares at the levels of 2,900. Wants to know if this is the right time to average, and wanted to check if worst is behind for the IT now. Tapan, I'll stick with you for this one. TCS, what's the view and overall perspective on IT?
No, I'm in a camp where I think IT will take time to recover. So at this level also, I feel, even if you see the guidance also, it's not so encouraging. Even the dollar rupee revenue also, it's not so great. So my take is better to avoid this stock. Once it comes up, then you better exit and go to other sector.
Got the view. Well, it's time now for the rapid fire round. Viewers as well as Tapan and Ajit, you both know the drill. The first question coming in on Dixon Tech. Harsha from Vijayawada is holding shares at 15,000 and 135 shares. So she's invested 20 lakh rupees, currently at a loss of 20%. Tapan, should she continue to hold? And I know the Vivo JV, of course, on the anvil, but what should she watch out for in Q4?
Yeah, better to hold. If she is a long-term investor, better to hold.
Okay, Mukka Protein is the next one. Arni Agnihotri from Pune is holding 3,500 shares. What are the levels of 30? From a short-term perspective, what are the charts indicating, Ajit?
hold with stop at 22 and use recovery to reduce around 28-30 zone.
Got it.
Irida bought at 125 by Shobha from Bangalore, asking should he just sell this counter at the current juncture? Ajit, would that be your recommendation?
So seeing rebound, but upside still seem capped. So yeah, she can consider exiting.
Okay, Cyient and Cyient DLM, does it make sense to enter these at the current market price? Mali from Hyderabad is asking. Tapan?
I think Cyient DLM, he can enter.
The next question coming in is from Kishore from Hyderabad, holding 49 shares of Siemens Energy at 2,700. Tapan, he's asking if he should add some more shares at this point of time. Can he do that?
Yeah, I can add. No, I think better future is there for Siemens Energy.
HDFC Life, from a long-term perspective, Narendra wants to know if he can continue to hold his buying levels to 90. So attractive levels for sure. Tapan, your view on this one?
Yeah, please hold it.
Paras Defense bought at 350-300 shares in April 2024. Tapan, it's almost doubled from there. Should he continue to hold or book some profits?
Congratulations to him. No, please hold this one.
The next one is on Vintage Coffee. 300 shares bought at the levels of 130. Sunita from Hyderabad wants to know if she can continue to hold from a short-term perspective. Ajit?
Vintage Coffee looks sideways to me, so better exit.
Okay.
Savita from Hyderabad is asking a question on PFC. She's holding shares at 396 and also holding REC at 320, both 100 shares. Tapan, should she just switch to PFC for both these holdings, and what's your view now on the counter?
Yeah, she can switch to PFC, but keep PFC for long term. It will do well.
Okay. Buy Crompton Greaves Consumer at the current price levels from a short-term perspective, and what could be the target, Ajit?
Upside seems capped. 275 is the hurdle. So very short term 256 with SL one can consider, but around 275 276 one should book profits.
Okay.
Vijay from Chennai wants to know short-term target of HDFC Bank, Ajit.
Upside seems capped because it's underperforming, still hovering in a very tight band around 20 EMA mark. So better avoid, switch to ICICI rather.
Okay, the correct price to enter Reddington from a short-term perspective. Ajit, your view on the chart?
Reddington is still struggling below the long-term averages. Wait for a close-up of 250 to enter.
Next question is on NLC India, bought at 56. Ajit, what should Vishwanathan do with his 600 shares?
He should definitely stay put. NLC has witnessed a multi-year consolidation range breakout, trading at the record high. So 285 should be the stop. 345, 360 positionally should be the target zone.
Okay, HAL 200 shares bought at the levels of 416. Should I hold or sell? Rajiv from Pune wants to know. So significant profits is what he's sitting at. Tapan, your view?
Yeah, congratulations. Yes, hold for long term.
Manoj Ahuja from Dubai holds BSC at almost 2,140. What's your view, Ajit, now on this counter? Should he book profit?
At least book partial profit and maintain a trailing stop at 3,200.
Okay, HPL Engineering bought at the levels of 678. Kumar from Hyderabad wants to know if he can continue to hold or not. Ajit, your view on the charts?
Hold with 740 as a stop loss, around 900 reevaluate.
Okay, all right. So that brings us to the end of course, this edition of Rapid Fire Round for Ask Profit. But just a slight correction. I think the HAL query that we asked, the buying price was not 416. I don't think it ever went to that. It was 4162. So that's just a correction from my end. But Tapan as well as Ajit, thank you so much for helping us answer all those 60 stock-related questions that we managed to answer in the last 1 hour. And of course, taking out the time and helping us answer all those queries. But viewers, completely out of time on this edition of Ask Profit. Thank you so much for joining in, but do stay tuned. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ बड़ा होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, where we get you the hottest companies in KYC, and whether any alpha is to be made to stay with the company or sell it off. All these important decisions is something which you can gather in from the inputs in our special KYC show. But let's give you a hint for which company is there today in KYC, and it's an interesting name. Indore based company it is, but it is having global footprint as well. The second hint I would like to give you, the company deals with the water infrastructure and the solutions and the equipment segment. Remember the water theme which was very strong 2 years ago? Of course, that's company is one of the beneficiaries from that as well. But the company is already up 6 times in the last 5 years. It's already a multi-bagger if you have been holding it for a long time. Interesting company, but company is which one? That's the most important one. The company in focus in KYC today is Jash Engineering. This is the company which we are talking about right now. Definitely it's out of favor in the markets. I'll get you the reasons why it is, and there might be some silver lining at play as well. But why are we calling this company? That's the main question to be asked. The first one is definitely going to be on the FY26 revenue. That has missed its guidance. Will there be more pain? Will we see that in the first half of FY27? The key FY27 targets and the rationale behind that. Remember, the company has given at least a 19% revenue growth coming in. Also, let's look at the third important question. That's the March order, current order book, and the outlook going ahead, especially on the global front. There are lots of misses rather than hits when it comes to the exports for the company. The US tariff situation, what's the progress coming, especially regarding its refund? 15%, 50%, and now the backlog which is there, that is where the refund comes in for the company. And the key updates for the manufacturing facilities in US and Saudi Arabia. Is there a pause here? Is it a long pause? Is it a short pause? Or will the company change its business strategy? The new inquiries coming in from the other nations, that's where the focus is. And recently they acquired a UK company as well. So we'll be understanding everything about Jash Engineering here. And of course, this UK acquisition is also very much important. When does the incremental benefit starts coming in? And to be honest, if everything is wrong, there must be some silver lining in the medium term, and that is where we will be asking this question. And joining in will be Prateek Patel. He is the CMD at Jash Engineering, where Prateek will help us decode the important updates and the outlook ahead for the company. It'll be a very interesting conversation, but let's see about the company. What are the key details which you should be knowing about Jash Engineering? Once it was the favorite of the markets, and remember, it's an Indore-based water solutions company. There's a lot of products also which company has regarding this water infra theme. I'm just giving you a revision. 827 crore order book, out of which 255 crore rupees is from the Indian market. So definitely the orders are skewed towards the international market. Penstock UK, they have acquired this, and the completion will happen by March 26. So the benefits of these acquisitions will play out, but at a later stage. Let's also talk about the growth strategy. They are eyeing almost 100 crore plus revenue from this region by 2030. I'm talking about the new GCC region. The SEZ expansion is going on for the Indore plant, the Pithampur, which we talk about. So that's what we will be talking about. Also, let's see the product revenue by composition and the water control gates. That's the most important one. 61% of revenue comes from this segment, the water control segment. Also, the remaining 16% comes in from the screening equipments, valves and hydropower. That's the balanced numbers you're looking at. But to be honest, अगर simplify करें तो water segment, water infra segment की company है और उनके अलग-अलग products हैं. But revenue composition, let's see what's happening here. India, it's 46% and US is 37%. That is where the concern lies, the way there has been a confusion in the tariffs and the way the growth outlook has been derailed for the company, especially for US markets and now even Saudi Arabia markets. That's what we'll try to get into the management's head on that. Recent updates, FY26 revenue was at 736 crore. The guidance came in at 775 to 800 crores. That means there is a miss in the estimate. Now they have initiated steps to claim the refund, and of course this will take time. This is not going to be easy because the tariff numbers, they are fluctuating as Donald Trump talks about them. There is a deferred investments plan playing out in both the US and Saudi Arabian markets, and this is because of the geopolitical tension. So this is one of the key overhangs for the stock. But the question remains is the worst over for Jash Engineering? First question is, the selling pressures seen is largely over for the DIs. We have seen a complete exit, we could say, almost coming in for the DIs. There is a lack of analyst coverage here. The interest is not there, and that is where I mean to say that smart money might be accumulating in certain current levels. So you should be watching out at Jash Engineering in this current scenario as well. There is action happening, but of course we do not know the news flow yet. The valuations are almost below 60% from its 5-year peak, and despite that, it's a high ROCE business model. So that is where we feel that Jash Engineering might create alpha from the current levels as well. The US tariff stability from FY27 onwards, when it will come we don't know, but hopefully it can come in the first half of financial 27. So that's the entire thesis. Is the worst over for Jash Engineering? But let's give you more details about how we judge a company in the KYC show. And largely we talk about the key numbers, which is very much important, where we check the income statement, balance sheet and cash flow. And also we get you the ROCE numbers here. In this case, that's the return ratios as well. But shareholding is important. Has the promoter sold? Is the FIs or DIs exiting this counter? And of course the street trade, कितना पैसा बना, 5 साल में कितना बना, 1 साल में कितना बना, या इस साल में कितना पैसा बना. Valuations, will get some interesting names which have been buzzing recently as well. All of them are in this water infra space. And lastly, outlook. Already we have shared that with the management, but the industry, where does the story lie? So these are the important operational parameters where we'll be judging the company. The first one, let's talk about it. That's the income statement. And the income statement, last 3 years, company has done really well. Revenue 3-year CAGR is up 26%. EBITDA, look at that, 39%, 40%. So there is a very good strength when it comes to the financials as well in the past. But the Q3 numbers have seen a bigger impact, and we can see that in the Q4 numbers also, as the management has already come out with its update, especially on the revenue front. And that is where a little bit of concern comes last 3 months and in this current 3 months as well. Because of that, I'm going to give this a neutral rating, and look at that, the margins has also come down from that 15%, 16% average, it's down at 11%. So a little bit of concern is definitely there when it comes to financials, and that is why the EPS is getting impacted and we are seeing an overhang in the stock as well. So net income statement, we talk about it, is largely neutral. But let's look at the balance sheet. In these trying situations, a company, when it maintains its balance sheet, that is where the strength comes in. Reserves are strong at 420 crore rupees, no major deployment, and that's a healthy strategy as well. Looking at the current market scenario, and seems like there is a pause. But net, let's look at the borrowings and the cash balances also. The borrowings are at the lower level and they have maintained that. There's no concern about it. And the cash balances also stand at roughly around 103 odd crore rupees for FY25. So the balance sheet management is strong. So I've given this a strong thumbs up for this. But let's talk about cash flows, how things have moved around. Is there any lumpiness? Yes, it's an infra-related company. Lumpiness would be there in its cash flows. So we have to keep a very balanced perspective in judging this company. It's been on the lower side for FY25, but the operational to the PAT flow, that has largely been neutral. And I've been giving this a neutral rating as well for the cash flow segment. But one thing is very much important, and that's the return ratio. I'm talking about the ROC numbers from FY22, it has actually held its ground from 17%. It's gone up to 23% and it's maintaining that ratio, and it's near that 25% mark. That means it's a healthy ROC business. Of course, the timing is wrong and the global exposure is giving an overhang in the stock. But net, the return ratios are strong for Jash Engineering. So I'll be giving this a strong thumbs up as well. But let's talk about the shareholding, and that's where my concern comes. Promoters had roughly 49% stake in March 24. That has come down to 43% in the month of December. Now the concern is there for DIs also. The ones who were there with the stock in the 2024 highs, they have all exited. Even FIs, there's not major change. This is a concern for me. This is a concern for me. So shareholding, I have given this a strong thumbs down. Let's talk about the street cred. How much money has been actually made? In the short term, nothing much has come in, to be honest. Let's just pull out the numbers. Last 1 month stock is up 6%. 6 months down, it's 22%. And this year itself, the stock is 11% down. Let's see how things have worked out over the last 1 year or so. Last 1 year, the stock is down 42%, and that's where the concern comes. But if you're a long-term investor, the stock has still made 6 times of the return, and congratulations to you if you are still holding the stock. But in the medium-term basis, it has disappointed investors. So net, in the street cred, I would like to give this a neutral rating. Let's talk about the valuations, and let's get you the key global peers or the Indian peers to judge this company. We have EMS and Vatek Wabag. I'll be taking the 5-year peak numbers where this theme was very much important. Look at that, 60 times P. Now it has come down to 28 times. The 5-year peak was 32 times for EMS. It's at 10 times. So you can see there is a big re-rating, I could say, in this industry as well. So net, the valuations, they seem decent, but is the street not factoring in what should have been there for the water infra companies? So net, it's a neutral rating coming ahead. Let's also talk about the outlook, how things have moved. They have missed the revenue estimates for FY26. That's a concern coming in. But going ahead, they are targeting a 19% revenue growth. And the biggest impact is coming for the geopolitical tensions. If they start easing, there will be some action in this company. Apart from this, let's look at the other key outlooks also, which should be on your radar. And definitely they have given a revenue target of 875 crore for the next fiscal. Remember, the Q4 numbers are not out yet. Now they have also initiated steps for the tax refunds for US tariff issue, but when it will come, only time will tell that. And they have deferred their investment plans in US and Saudi Arabia, stating current geopolitical tensions. Also, there is an increased presence seen in the non-US markets such as UK, where there's an important acquisition at play as well. But let me give you the final rating for the company. And interestingly, I would like to point out that most of the parameters are pretty much decent, but the return ratios and the balance sheet, that is where the strength is coming. It's a high ROC business, but shareholding, no major support coming in from DIs, and even promoters have sold their stake. Largely, we see the valuations are neutral going ahead, and outlook also neutral to good. So net, the final rating for Jash Engineering right now, I would like to point out, is 4.5 out of 8, which is largely, we could say, a neutral rating. But time for a quick break right now, and on the other side we'll be speaking to Pratik Patel. He is the CMD of Jash Engineering. Stay tuned.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Sell Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means.
Right, we are joined in by Mr. Pratik Patel. He's the chairman and MD of Jash Engineering. He's having over 30 years experience in the industry, and he joined the company as a graduating fellow as an estimation engineer, and he was inducted into the company's leadership team in 1996. And to get in more details about it, we are joined in by him. Pratik, good afternoon. It's always a pleasure to have you with us. There was a dip in the revenue for FY26 as you compare that with the guidance given. What's the impact and the guidance for Q1? Is the pain still persisting, and execution issues, will they likely to continue going ahead?
Nothing to do with execution. The two main reasons were the tariff in US, and another, when the tariff got resolved, the other issue was the Middle East war, which ensured that much of the products which were ready could not be shipped to Middle East, also to Southeast Asia because of lack of container availability or lack of enough number of shipping during the end of March. So I believe this is a pain, which is one-time pain until the war is resolved, and also based on the tariff issue getting resolved in America.
Right, Pratik. And what would be the key FY27 targets going ahead? Any rationale you're giving in and you're factoring in whatever is happening globally, especially for the revenue and margins?
See, internally, we have a target in excess of 900 crores. However, looking to uncertainty, the tariff issue, I would say, is still not fully resolved. The war, we do not know what is going to happen. And so we had kept for the public a target of 875 crore for our revenue. Our order booking is already close to 830 odd crores. So I believe this is easily achievable. And if everything stabilizes globally, then this is something we can surpass as well.
Right. And Pratikji, if I'd like to point out the entire order book status, what's there in the March, how's the order book outlook looking like, especially if you divide it between domestic and the non-domestic areas? What's your view?